Right. So good morning, all, and thanks very much for joining us for this masterclass produced by the Caribbean Association of Banks. And today, of course, we'll be discussing the concept of financial technology and the regulatory environment. And I think we have a very interesting conversation to be had this morning. Our first session will be looking at the idea of moving towards a simplified electronic fund transfers. As we've been saying, it's something that's been very much on the minds of citizens and governments across the Caribbean, and certainly has been something that's been talked about a lot by central banks, particularly during the pandemic. So today we want to look at the idea from the standpoint both of a practitioner in the sphere of electronic payments, as well as from a more institutional perspective. And to lead off our conversation this morning, I'm delighted to introduce Martin Hanna. Martin Hanna is the founder and chief executive officer of Penny Pinch, and Penny Pinch is a fintech retail business, digital savings retail solution connecting customers to retailers via savings products such as cashback, rewards, and coupons that integrate into a digital payments wallet. Now, I'm sure Martin will tell us a lot more about it. He is an award-winning fintech and retail entrepreneur. He holds the position of CEO and founder at Penny Pinch. His passion lies in design, product development, and marketing, as well as assisting entrepreneurs by guiding them through their business career. So, Martin, I now hand over to you, and welcome, and thank you for joining us.
Thanks, Terry. Thanks for having me. I'm delighted to be here. Should I share my screen and begin the presentation?
Absolutely.
Okay. Can you see my screen?
Yes.
Oh, yes.
Okay, great. Second.
Sorry.
Right. So I'll start off by saying that, Penny Pinch is St. Lucia's first and only digital wallet operator in St. Lucia so far. And we are, as Terry mentioned, a financial technology company providing digital payments, money transfer services, loyalty solutions, bill payments, and more. So the problem that we're solving as a fintech is really to get away from a few things, which is long lines, having to leave your homes. And what we've built is, an all-in-one ecosystem that allows friends and family abroad, locally, or even regionally to make payments, transfer money. And what's great is that we've built in a loyalty program into this. So how do we compare to others? I mean, we're inexpensive, more efficient, and we're mobile friendly. And we're focused on a mobile friendly approach. And that's where most of customers are now transitioning to or have already been. So our mission is really to create an ecosystem where anyone could do anything around moving money, whether it be paying a business, sending and receiving money from abroad, withdrawing to your local bank account, paying your bills, and all these types of little services that people use on a daily basis around moving money. And, in the Caribbean, we've always underutilized, or we haven't been up to date on payments. And, fintechs are really here to embrace that and put a technology first approach at the banking system. So in terms of our partners, we've partnered with the likes of First National Bank in St. Lucia, who is our banking partner, as well as Republic Bank. So they allow us to do stuff like card processing, as well as really utilize the ACH to do disbursements, settlements, and payouts to both consumers and businesses. We've partnered with the likes of Digicel, for example, and they've zero-rated our app, meaning customers could use it without taking any data consumption, as well as Quick Delivery, who is our local delivery partner. And they did not accept card payments before, So, using Penny Pinch, they're now able to engage with their consumers both in person or remotely. I mean, Quick Delivery has done we've done transactions where customers abroad would be able to pay for family members' lunches that they deliver, randomly as a surprise of love. So I'll take you through how our app works, and then I'll get into a topic that we'd love to get more into in the Caribbean. So as a fully digital platform, you first download the app on the App Store, and then you create a free account using your email, social media, and we give users the options of what they're used to, whether it be Facebook, and it's all secure. So from there, they're able to do, or they're required to do a full digital KYC verification. And we've embraced taking compliance digital, which really creates a more efficient workspace and environment, especially in fintech. So within 3 minutes, a customer scans their selfie, takes a selfie of their face, scans their front and back ID, and within 3 minutes, they could either be automatically verified by our platform provider, and that includes checking global watchlist checks, PEP checks, and even adverse media checks. So it's an all-in-one KYC solution that we use to stay compliant. So once you've verified your account, you could do a few things. You could add funds using a debit or a card. You could also do a bank transfer via the ACH system, or even have your employer get your salary paid directly to the app. Or using our money transfer service, you could receive monies from any Penny Pinch account. So we've added the flexibility of multiple ways to fund your account. So once you funded your account, you could then do a couple things. You could make a payment directly to a business, and that does not mean it has to be in store. It could also be remotely, online, in another country. And people love that because it allows them to do stuff like, on the phone ordering or via social media. So it gives merchants that flexibility. And what we've done is we've taken a loyalty first approach and have started including, well, already have been including cashback, discounts, and rewards for when you pay using your wallet balance. So apart from just making payments, we've also partnered with Shopee, who is our local billing provider. And you're able to now link all your bills, have family pay your bills all from your smartphone. You no longer need to now take all these lines and whatnot. And once again, our utilization of the clearinghouse allows us to provide this really efficient technology that from your hands, without leaving your home, you're able to push all sorts of payments. So apart from just paying bills, you could send and receive money between Penny Pinch accounts. And this would be using an email or username, and it's instant. Now, let's say you need cash. You need access to physical cash. We allow you to link your bank account and withdraw directly to your local account. And that takes within 1 business day. So fintechs really play a major role in providing access to payments. As you could see, we've really put a lot of effort into a consumer first solution to getting access to easy payments, whether it be me sending my mom in Viewport money or from another island. We've made it really easy for anyone to get access to payments. So how exactly are fintechs like Penny Pinch boosting payments in the Caribbean? So for one, we're focused on technology, and we have a lot of value-added services that kind of keep the customer going and happy. And these, include the loyalty aspects of things, which incentivize customers, go digital, save a few bucks. And that's where Penny Pinch kind of has its brand around saving people money while offering them access to financial products. Another great thing about fintechs is we're able to give ease of access to consumers. So consumers right now have it very difficult to send payments if both the sender and the receiver don't have the same bank. It's quite a challenge. You have to call your bank, email them, or send a secure message. That could probably take a few hours to verify and whatnot. So with Penny Pinch, we've kind of eased the access into people being able to send and receive money, whether it be locally or cross island. Another great thing is not just to the consumers, but to the merchants as well. Merchants who don't have access to card machines or are not able to accept online payments can now do so for Penny Pinch. And we've gotten a lot of uptake and small businesses especially who are interested in this. And these are the ones that are really in need, especially right now during the pandemic. Now, apart from all this great stuff, we also provide the convenience. So going digital really provides a safer mindset. It's much cheaper, it's much more convenient, and it makes everyone's life much easier. So why should banks really embrace fintechs? So banks should not look at fintechs as a competitor or more of a foe. They should actually look at it as opportunity to tap into a huge market that technology really enhances. So for one, we're really focused on adding value-added services to a customer's banking institution, such as money transfer services, disbursements, because in the end of the day, they are linked to a consumer's bank. So we are really adding value-added services to that circle of products. Another great thing is that we're focused on technology. So let the banks do what they're really good at, manage their customers, while letting the fintechs really innovate on the technology side and create products that not only consumers could use, but small businesses can use alongside their bank accounts. What's also great about fintechs is we're able to tap into the unbanked. So we do not have all the rigorous and entries to creating a bank account. So it's a little bit more easier for someone who isn't banked to be able to actually get access to all those payments and money transfer features. So it's also an opportunity for the banks to sort of expand their network that they've tapped into to the unbanked. And what's also great is that we've seen a global trend where banks are partnering with fintechs to go in digital, providing a more convenient way. And I mean, we look at the case where First National took us on as our banking partner, and they really saw the opportunity and the goal that Penny Pinch was trying to solve, which was really providing some good technology while supporting your banked clients. So what I'd like to touch in on is open banking, and this is really the next step on how payments could be utilized. So open banking is essentially a secure way to give a fintech like Penny Pinch access to your financial information. And this has been going on for years in the Americas. So for example, let us say I wanted to manage all my bank accounts from one single app. That's open banking. Open banking really gives fintechs or technology providers authorization for consumers to now link their bank accounts. And then once the consumer has authorized that linkage, the fintechs now get some information that they could use to give consumers a better experience. For example, being able to manage all your bank accounts in one platform. It makes things much more easier to the consumer. And there are much more benefits that are being used right now that we could be leveraging. So how is it used today? So apart from account aggregation, which I just mentioned, it's also great for personal finance management, which we quite struggle in. So by using open banking, we can now, aggregate all your accounts into one platform and give you a better idea of what you're spending on, where you're spending at, and how you could, be more budget friendly, especially when you have all that information into one central platform. What's also great is, micro lenders and any lending institutions could also take advantage of this for instant credit risk by accessing multiple data points across financial institutions to provide a better overview of credit risk. Now with AI and machine learning coming into play, you can now utilize all this data to provide a really accurate credit risk score. Another great thing about open banking is it can be used as a digital passport. Customers would be able to, let's say, use their bank account to verify their ID. If they're, let's say, trying to get a loan from a microlender or opening a new bank account, they can now leverage that open system to get key information such as, name, ID, date of birth, and that could be used as valid KYC since, the banks keep up to date with their KYC. So that's my presentation. I hope this really gave you a small insight to, what we're doing at Penny Pinch, how Penny Pinch is really, changing the space in the payments sector, and how open banking, which is quite a new concept to the Caribbean, I see really being beneficial once we tap into it, much more efficiently. And what's great is that the technology is quite readily available. It's just that we haven't come together as, the Caribbean as an association of banks. And let's say, hey, let us allow XYZ fintechs to get into open banking, create these value-added products that the bank's consumers will definitely love, and they have their bank's support on it. So I appreciate the time, Terry and Cab for having me. I'd love to answer any questions. Feel free to shoot them at me.
That sounds like a very direct call to action there, Martin. We need to come together as a Caribbean Association of Banks. But yes, Martin, very good presentation. Thank you very much. We will be taking questions right after we hear from Philomena. So it is my pleasure now to introduce our second presenter, Philomena Lee, General Manager for the Eastern Caribbean Automated Clearinghouse, and she has been in that position since 2014. Philo has many years of experience in the payments industry, including startup of other clearinghouses and automated teller machine networks in the region. Prior to this role, she was Director of Strategic Business Projects at a major international bank. During this time, she led teams at the local and the regional level across 17 countries. She has over 40 years experience in the financial services industry, working in the Caribbean and Canada. She has broad exposure in banking, operations, payments, risk management, finance, and leading the development of business solutions and processes using innovative technology. She has received training and is certified in the Six Sigma processes as well as business architecture. She's an associate of the Chartered Institute of Bankers, London, England, and a fellow of the Canadian Institute of Bankers. It is my pleasure today to introduce and to welcome Philomena Lee to the CAB Masterclass, and I will be bringing up her presentation momentarily, as I will be running that on her behalf. So Philo, me just hand right over.
Thanks very much.
And the floor is yours. Yes.
Thank you. Thanks very much, Terry. Good morning, all. It's a real pleasure to be able to have a chance to present on this forum, and I really thank CAB for providing this opportunity. The very first presentation by Martin actually leads in very nicely in my presentation, where I'm speaking about what the ACH and the banks are doing towards simplifying electronic funds transfers. So let's move to the next slide, thanks, Terry. What I'd like to say here, most important, and as mentioned by Martin, is that the benefits of electronic fund transfers are being recognized by consumers as well as businesses and governments. And we are seeing a greater trend towards usage. Just to give you a sense, in the Eastern Caribbean, the ECACH processes transactions for the 8 territories of the Eastern Caribbean Currency Union. And we've noticed that since electronic funds transfers have been introduced across that region, the usage has increased materially. So EFTs were introduced in 2018 across the 8 territories. And from mid-2018 to now, we are finding that over 25% of transactions processed through the ACH are represented by electronic funds transfers. So that gives you a sense as to the adoption. Now, just so that we are all clear what I'm speaking about, and I'm encompassing here in electronic fund transfers, not only transfers through the automated clearinghouse, but transfers that move, as Martin says, from an account in one bank to an account in another, account within the same bank and between customers. The clearinghouse is a key channel, and we really facilitate the transfer of local currency transactions between different institutions. At this point, I'm not speaking about international currency transactions, although in the works, we have the opportunity to handle other currencies as well on our network. The key point about electronic funds transfers, they are convenient, they're quick, efficient, cost-effective, and secure. And I want to point to that point, but let's discuss it a little bit more as we move on. Now, why do we need to use more EFTs and simplify the process? As we spoke about it due to the pandemic for COVID-19, customers needed mechanisms for making payments that will never go away. They are fast, timely, cost-effective, and accurate. And our payment providers, including the previous speaker and the banks, they need to increase their organizational capability and resilience so that we can satisfy our customer needs. Next slide, please. Just to put in context, our previous speaker spoke a lot about the capability of his application. So just so that you can understand, this particular slide, starting on the left, what we're showing here is that customers have their various mechanisms to transfer their payments. So a customer who wants to make a payment, they can either start with their bank and or payment providers and or suppliers. The files are processed to a financial institution who's on the network. And at that point, transactions that are within the same bank are separated and are called on-us transactions and posted to core banking. The transactions that are not for the same FI are sent to the automated clearinghouse. And these are processed then across the different financial institutions. So as you could see, the entire process is simple and can easily be shortened as much as possible. And there's where I would like to speak about what can be done, what is being done, and what can be done. Next slide, thanks. Next slide, no, there's no intention here to speak a lot about it, but all this is simply showing you currently what's happening across the space, the payment space. We have origination points for banks, that are linked to the automated clearinghouse. So here we're starting again on the left. You receive a transfer request and it goes all the way through the system to the final receiver. Banks at this point in time generally have online banking, mobile banking, and branch banking. We are now going to speak about these various institutions that are coming across. Here is the other thing perhaps that our consumers and our businesses need to be aware of. We have different types of payments that can go across the network. You have credits, which are direct deposits, and various types of the credits are indicated here. Then, more importantly, and these are a developing area, you have direct payments. These can be both credits and debits. Credits when it's initiated by the person with the bank account, and debits when it's initiated by the receiver from and sent across the network. What I'm showing here is really the key participants within this whole network. Center to all of this is our ACH operator, our central banks, and settlement parties. Because we facilitate the settlement of these payments, whereas the payment providers allow the initiation of payments from originators. These are forwarded through the network to the receiving financial institution, ultimately to our receiver. Thank you. Okay, the point, what I want to speak to here are when you look, having gone through the process, where do we see the areas of simplification possible and the trends? Origination. Customers are increasing the use of their different various channels. Once, many years ago, it was simply branch. Now we have mobile, we have online, we have various payment providers who are fintechs. So what we do is at origination, we'll talk further about what's possible. Then the next area where we can improve the payment process is within the financial institutions and actually within the ACH. What we do here is the banks are increasingly, together with fintechs, partnering to provide quicker processing of payment instructions straight through and online. From the automated clearinghouse and settlement perspective, we have increased the number of times that payments are being settled, and so we are moving towards frequent to real-time settlements. And finally, from a receiving customer perspective, we are able to increase the receiving institutions and the points of receipt so that customers can very quickly access their funds. Next slide, thanks. Next slide, thank you. Terry? No, forward, thanks. Forward. So what I'd like to speak to here is a little more around what is possible. So from the ACH perspective, and ACHs currently exist within most territories of the Caribbean, and in the Eastern Caribbean, it's unique, where we are able to link customers and process transactions across 8 countries of the Eastern Caribbean. So currently, we already have institutions who are bank customers. The clearinghouse is working with the central bank to try to involve and allow access to things like credit unions, payment service providers, mobile wallet providers, and cards using fintech. So as you could see, what we can do as well is allow customers to be able to access their funds, whether it's at bank accounts, it's on mobile wallets, it's digital fiat, which is another topic that's coming up today. And finally, But not last, it's merchant services, because today what we don't have is merchant services using electronic transfers. Currently, most of the merchant services being provided is done by way of cards. So that's an area of expansion. What I want to say here, having spoken about it, is that we've spoken about the opportunities for simplification. We need to continue to simplify the process, but I want to mention here specifically the need to manage the various risks. The previous provider spoke to it, and in our case, as an ACH and an institution with a responsibility to process and handle payments across a region, we are looking primarily at making sure that all of the risks are being managed. You have compliance risk, you have security risk, and you also have, as Martin mentioned, areas that within fintechs are very important for us to cover. So these are all being addressed within the framework. The other thing we need to perhaps understand is that all the countries are at various stages and different stages of development and implementation in offering simplified electronic transfers. So it's going to be progressive as we move ahead. However, I'm very certain that within the next 5 years, given the trends that we are seeing today and the increased usage and the need for contactless payment providers, that financial institutions and the increasing number of payment service providers and the networks, we will be able to offer much improved services to meet customer needs. So that's my conclusion. And like Martin, I'm open to questions.
Thank you very much, Philo. And of course, folks, you can type your questions into the chat or the Q&A if you have any specific asks of Martin and of Philomena. And we'll start with Lisa, excuse me, Lisa Skinner. I'm asking a question for Martin. What is the relationship regarding customer information between Penny Pinch and its bank partners? And again, we spoke earlier off camera about security, Martin, and certainly that is a question that goes straight to that.
Yeah, sure. So Lisa, the way that our banking partner relationship is structured is it's really just providing us access or sponsoring us access to, the financial infrastructure. So our customer data is held by us, and we don't share that data with our banking partners. However, what we do is we try to align ourselves, with ensuring that our KYC is up to date and is one relevant to the nature of the business that people will be performing on Penny Pinch. So our customer data, it's obviously a very sensitive thing, and we plan on keeping it that way. We don't share it with any of our businesses, and only really the top head management of Penny Pinch has access to that data.
Lisa, I hope that addresses your question. Martin, I have a question of my own as well.
Sure.
And it is, you spoke about banks and FIs not seeing fintechs as competitors, but as partners, as collaborators. Now, even posing that's a little bit of a loaded question or loaded statement, in that it assumes that the current situation is that is how fintechs are perceived by those organizations or institutions. What can be done to change that relationship, and what is being done? What do you see as being the current state of affairs as far as a change in the way fintechs and banks relate in the Caribbean?
So, as you said, there's this automatic perception that we are, foes and attackers and whatnot, but it's really just kind of creating that awareness or letting the banks know, what is going on, what are the trends, and how can they benefit from our technologies. Because in the end, I mean, fintechs are powered by usually banks. So they are really the ones giving us access to, facilitating payments. We are just leveraging some really good technology and kind of focusing on the consumer experience. So I think it's really providing that awareness to the banks. And it's also a new revenue potential stream. So via, card processing or fees on ACH, because fintechs, well, because of the nature of how they work, they process, tons of volume where card processing is involved. Or, if we do ACH on a daily basis to businesses. So that's a lot of uptake in, transactions for the banks that they could now use as an additional revenue stream due to the partnership. So, I mean, we do all the heavy lifting. They get to kind of be that back chair, and they just provide, access to that financial infrastructure.
All right, Tam, we'll come back to you in a moment, Martin. I have one for Philomena as well. Philo, one of the things that you mentioned, especially towards your conclusion, was, the fact that there's a little bit of a disparate approach to payments across the banking system and across different jurisdictions, especially in the Eastern Caribbean. What can we do to create greater consolidation or to create a more unified strategic approach to the issue of payments in the OECS?
Okay, just before I answer that question, I wanted to add something to what Martin had said. And it's just to say that as the ECAH, we are working with the central bank to see what can happen around creating improved access for payment service providers and other non-commercial banking financial institutions. So that's one of the trends and that together with the ECCB, we are working on. So I just wanted to put that on the table. Secondly, the question was around the disparate approaches. And as I mentioned before, the ACH covers 8 territories. And I think the challenge with the approaches, and which I mentioned, was the fact that we have within the Eastern Caribbean, we had a major provider like First Caribbean that's across the system, but we have about 14 local indigenous banks, and they are all seeking to improve, but they are not always able to improve at the same pace. So again, facilitation of discussions so that we can perhaps have the FIs and other payment service providers better understand how we can work together, I think would be the answer to that one. And this is where I think the network can play a major role, being that central point in bringing everyone together.
Yeah. And where do you think we are along that pathway or along that journey?
Okay.
Have we made progress? Are we on the way?
We are making progress. So as I said to you, when we started this journey, we were primarily only working with all the banks. And the banks had branches for payment initiation, and some of them had online capability. Over the last couple of years, almost every bank currently has the ability to process payments online. They are all now working to allow processing of payments and initiation of payments through mobile approaches. And this is where I think fintechs with their greater or their focus on giving you capability could perhaps work better with the banks in order to allow their customers access to mobile banking. And of course, we have the latest entrant, which we'll hear about later, the cash, digital cash. So the number
we'll be hearing about very shortly, yes.
Right. So I don't know if that answers the question.
I think so.
But
Yes. One of the things Lisa was asking, and in fact, one of the original, and we already have Kiran Santoma from ECCB on. We should be joined shortly by Simon Chantry from BIT. Welcome and thanks for joining us this morning, Kiran. So they'll be doing their presentation momentarily. One of the things that Lisa was asking, and in fact, our original remit for this session would have been real-time gross settlement when we first started discussing putting this whole thing together. What can you tell us about the potential for real-time payments? Because one of the issues that is
actually that's a very
yes, go on.
That's very interesting. And Lisa, thanks for that question. Because one of the things I want to emphasize is that most of the automated clearinghouses are looking at real-time payments. But in the Eastern Caribbean, our network, in fact, can, with support from the banks, do real-time payments. Because our network actually is a real-time network. And as soon as transactions are fed to the network, they are immediately sent to the receiving banks. So with more cooperation and understanding of the capability, the ECACH is able to actually simulate real-time payments. We are unable at this point to promise the real-time payments because we are very dependent on our partners, the banks, to ensure that payments are processed to their customer accounts. But again, that's another area for growth, improvement, and simplification.
Okay, and I did say, Martin, that we were going to come back to you. The question of real-time gross settlement of real-time payment is something that weighs heavily. Do you think that this is a major delimiting factor at present for payment providers like yourself?
Sure. I mean, what we see is people don't have issues with the whole, it really depends, right? So if I push a payment on the clearinghouse at around 8:40, then that consumer will probably get it by 10:30, right? It really depends on when you kind of push it. But I mean, who does not want real-time payments, right? So what I've seen is customers don't mind waiting one day, but ultimately people want real-time payments. And I think that will kind of change the way people kind of perceive how they go about doing their payments. If real-time payments had to become a thing, it will also change how we, work with merchants, as well as just generally how we feel about payments as well, since we have that gratification that I'm requesting money and then I'm able to get it, within a few seconds. So it does come with many benefits, of course, but as Ms. Lee said, it really depends on how much the banks are willing to kind of push it. Because, well, from my understanding, the way it works right now is there's different settlement times where the banks will go in and kind of settle the files. So it's really collaborating with all stakeholders to create this, one unique experience that consumers will ultimately benefit from.
All right, and I think Philomena, you have something to add? I see your hand up.
I just wanted to perhaps speak to that point.
Yeah.
On the clearinghouse at the moment for electronic transfers, the files are actually pushed, as I mentioned, immediately. There are 3 points of settlement, so that banks can be very certain that transactions are settled. However, there is protection from a risk perspective for the banks in place. In that we have collateral management within the automated clearinghouse, and consequently transactions that are processed can in fact be processed immediately by banks once they receive them to their customers, because settlement is not an issue. So as Martin said, he's been finding that it takes a couple hours, and perhaps that is an area where together the financial services industry can work to improve for the customer experience.
Another thing, Ms. Lee, is also that, the whole weekend situation where, I have to wait until Monday for me to be able to do a transaction. So maybe that could be looked into in future, allowing access on the weekends, because people still live about their daily life. They probably do more on the weekends. So doing that type of thing on banking holidays, especially if you're able to automate things, I think will definitely help as well.
For sure, then we make a note of it and see what can be done for weekends.
Yeah.
The pastor, Karen Richardson from CUB, says that they process payment on a real-time basis, of course, a CAB member, and use an automated straight-through process. Thanks for that, Karen. What I think we could probably close out on, although we are still waiting on Simon, I will just drop him an email to double check. He did message me this morning. We do have Kieran on already. But what I think we could probably close out on is this. The pandemic, of course, has raised a number of issues, has really changed the way people do things in various spheres of life. How do you think the pandemic has changed? And when I say change, I mean changed beyond changing back, irrevocably. How has the pandemic changed the way the Caribbean, or started to change the way the Caribbean views payments? Either of you can take it, either or both.
Do you want to go first, Martin, or would you?
Yeah, sure. You can go first, Missy.
Sure, go ahead if you want to say something.
No, you could go ahead. You can go ahead.
Oh, okay. So from our perspective, what the pandemic has done is actually caused folks to have to use electronic payments, since in many cases, because of lockdowns, etc., banks were closed, offices were closed. And as I mentioned earlier, payments are an ongoing need. So if you need to make a payment, you got to find a way to send it to the receiver. And as a result, I think folks who had previously not even tried to use electronic payments were forced to do so. And having used them now, they find them so much more convenient, because here's the reality. You can do an electronic payment any time of day. I mean, even think about paying bills, etc. You forgot your bill, you can go on at 9, 10, anywhere, midnight, and still be considered same day. So that from my perspective, is what the pandemic has done. Changed the, caused folks to use payments, electronic payments more often, and has to some extent caused a conversion in the approach to payment origination, and allow many more people to recognize the importance of electronic payments. And in particular, on the side of businesses, for example, I've been speaking primarily about individuals, but businesses, many businesses found that electronic payments then became the way for them to settle salaries and payrolls and payments to their suppliers. So that's where I think COVID has really been good impact, has had good impact.
Mm-hmm.
Martin, your perspective?
Yeah, I mean, I totally agree. It's kind of forced us.
And I should say, sorry, Martin, I should just say that
Yeah.
Martin's company actually emerged during the pandemic. So he perhaps has a very unique and certainly very pertinent perspective.
So there's two distinct on the consumer end. Customers realize that they're forced to now go digital and do electronic funds. On the business side, while they are interested, we notice that they're still focusing on surviving, or in terms of accepting mobile wallet payments. So in our case, Penny Pinch, businesses are focused on, still surviving the pandemic. and just keeping within their own feet. But they are very interested in expanding past just cash and card and actually going mobile. So, as time passes, as vaccines get rolled out, businesses kind of get more in their comfort zone. They'll definitely accept new types of payments more easily. But, just coming back to what Ms. Lee said, yeah, it kind of has forced the way that we think. So usually it's like, okay, I'll pay you with cash, or I will, I'll pay you with cash, right? But now it's kind of like, okay, what is your bank account number? So it's kind of a change in how we think on doing things. And that's what I think COVID has really benefited, is that changed our forced reality that we have to now come to face, is that yes, we're quite behind in terms of payments, and COVID kind of pushed us and let us know that, I mean, we've been doing things inefficiently for a while, and there are underutilized payment platforms that we can use, such as the clearinghouse. It's just really more of the education and the awareness.
All right, thanks a lot for that, guys, and thank you very much for your impassioned presentation. Clearly, you both are very keen on this area, and so it was good to have you on this morning. Again, thank you for contributing this morning. So that concludes our discussion on moving towards simplified electronic fund transfers. As I said at the beginning and off camera, I'm sure there's going to be a lot more dialogue about this area going forward as we emerge from the pandemic, or as we continue to grapple in the time being with the pandemic and beyond the pandemic. I believe is going to remain very much an issue for us. So we are going to move on now to our second conversation, and that conversation is going to revolve around central bank digital currencies. And the Caribbean, as we know, has been leading the world on CBDC. We've seen over the last year, well, there's been a lot of conversation over the last 2 to 3 years, if not more. But certainly over the last year, we've seen the emergence in the Bahamas of the sand dollar, the world's first central bank digital currency, and then the first central bank digital currency in a currency union coming out of the Eastern Caribbean Central Bank, and of course referring to the Eastern Caribbean Currency Union. So a couple of very, very exciting developments there in our jurisdiction, and we couldn't be more keen to speak more about our leadership in that regard. And so I'm very pleased this morning to be able to introduce our next two presenters. And the first, we're going to kick off with Simon Chantry. Simon, we've actually had his company present at the CAB Conference 2019, where they did a very, very well received panel on digital currencies. Actually, if you look at our YouTube page, that panel has been receiving renewed interest of late, and a number of people who've been coming in and watching it have actually watched it over the past month or two. So clearly there's rising interest in this particular subject. And so we're very happy to have Simon Chantry on board. Simon is co-founder of Bit.com, the Caribbean's first blockchain firm, and Bit enables central banks, financial institutions, and other stakeholders deploy, manage, and integrate with digital currencies on internet-native payment networks. Simon is a board member of the OECD's Blockchain Expert Policy Advisory Board, BEPAB, and a member of the World Economic Forum's Digital Currency Governance Consortium. He's working on CBDC design principles and standards with international players from both the traditional financial sector and the cryptosphere. So welcome this morning, Simon Chantry. Simon, do you want me to share your presentation, or will you be able to do so from your end?
Yeah, thank you, Terry. I'm happy to do so from my end.
All right, over to you. Thanks much.
Okay, great. So real pleasure to be with you this morning, and looking forward to giving you a short presentation here on how the CBDC and broader digital currency space has evolved over the past number of years. So let me just share my screen here, and you can give me a thumbs up when you can see it, Terry.
Yep, loading.
Okay, great. Okay, so I want to jump right into it just to give an overview of what the typical journey for central banks has been, and this roughly applies internationally. So beginning in 2016, I think the Bank of England was the first. I think BIT was the first to release a white paper on the topic for CBDCs, and it was around the same time that the Bank of England started their investigation and research phases. So this is sort of a common sense path that you would expect, and central banks are at varying stages within this journey. So investigation and research at the beginning, then getting into workshops and public consultation. Now, this phase, super important, still quite a few central banks in this phase. The European Central Bank is one of them, doing public consultations throughout the year and already done a number of public consultations. This is intended to basically increase the knowledge base for all the relevant members within the central bank to ensure that they're understanding the nature of the project that they're getting into, the nature of the technology, how it could affect their economy and their financial system specifically. One of the challenges that BIT has, which I'll get to a little later in the presentation, is designing a system that's applicable, that the base feature set is applicable to as many central banks as possible. But as you would expect, each economy and each financial system is quite unique. And so a certain degree of customization is required, and the workshop and public consultation phase, and certainly when you get into the internal working groups and the feasibility study phases, this is where you're fleshing out the details of how a CBDC is going to affect the economy and how it's going to tie into the existing system. These can't be standalone systems. If they're going to provide the benefits that the research has been sort of shouting about for the last few years, they certainly need to be interoperable with the existing systems, and they need to provide additional value, of course. So public consultation, definitely geared towards gaining feedback from the public about their concerns and their requests and feature requirements, what they would like to see in an upgraded national digital currency payment system. And then getting into the internal working groups, this is really to start defining the technical requirements for the CBDC system itself. And then if we think about the feasibility study, as in some cases these are written, in some cases these are actually software sandbox tests where the theses that you developed in the internal working groups and the requirements and use cases and user journeys that you developed are now being tested and validated in sort of closed off sections, sandboxed environments. Then we get into pilot projects. Pilot projects are open to a wider number of participants. Pilot projects could be open to the public. It ultimately depends on the desires of the central bank itself. But in a pilot project, you're going to want to see all of the software applications and the underlying architecture and transaction network in operation. You're testing out all of the use cases and the user journeys that you developed in your journey. And you're sort of proving and disproving your thesis and adjusting your technical specification to ensure that your live deployment, your production environment is as close to, a long-term solution as possible. Now, software is never truly done. The software is always an iterative process. So you're always going to be upgrading, especially now where standards are still being developed. So certainly BIT and myself, we are active in the standard development efforts worldwide. So whether it's the ITU and Stanford University with CBDC standards, or speaking with the MIT and the Fed in the US, to my involvement with some of the international organizations like the World Economic Forum, currently doing some work on CBDC design principles. So when you get to the pilot project phase, it's crucial to be building towards the standards that are already out there, but also with that customization that sort of speaks to your own domestic economy and your financial system. Live deployment, pretty obvious. This is where it gets opened up to a broader set of users, businesses, merchants, governments. This is really the go live, the go-to market. And this is where we just passed with the Eastern Caribbean Central Bank. On March 31st, we entered into full live deployment in 4 of the countries in the Eastern Caribbean Currency Union. So St. Lucia, Grenada, St. Kitts and Nevis, and Antigua and Barbuda. and St. Vincent is soon to come. Operationalization is, again, because of how new CBDCs are, the operating models are still being defined. And so you can think of operating models as, where do the cost structures come in? What transaction fees could be charged on what types of wallets? What types of wallets are there in the system? These are all parameters that can be sort of dictated and changed by the central bank. And so while, again, you want to establish as many of these as possible ahead of time, you do need to adjust based on the feedback that you get from market. It's just like any other software product. When you roll it out to market, you're going to get feedback from the market about how it's received and how people are using it. And do they have, are there any problems? Is there any friction that you introduced? And so operationalization is sort of this ongoing iterative process of constantly evolving the solution, making sure that it lives up to the standards, making sure that it meets regulation, and that the regulation can be properly enforced on the network. So it's sort of this ongoing iterative process. And I'm sure if we think back to software solutions that we're familiar with, take Facebook, for example, the first version of Facebook is certainly not the same version that you use today. And so, CBDC software platforms are no different. Certain amount of features will remain static, but the majority will evolve over time. So that sort of gives a summary of the CBDC journey that central banks have gone through over the last few years. And each of them are sort of at different stages, certainly more progressed than they were, a year or two ago. But there's still a distribution for the over 150 central banks in the world. Okay, so the events leading up to, or rather contributing events to central banks, some of them are sort of dotted along this timeline here. I'll speak more broadly about them. I think the Bitcoin white paper itself coming out in 2008 and Bitcoin launching in 2009, this was the start of a movement towards what I refer to as internet native payment networks. So all payment networks before this time, at least accessible at the retail level, were sort of internet native payment applications. So yes, you could access the likes of PayPal or Venmo or Zelle through the internet, and this would be your primary interface for transacting, but the settlement would actually happen in the legacy system. So if you're using, whether it's a wire transfer or a PayPal transaction or anything like that, or a credit card transaction, while the transaction happens in front of you, it actually settles via an ACH system, or in some cases RTGS system, which are legacy systems and networks of correspondent banks in some cases as well. So it's sort of a legacy system that's used to track balances between institutions. Whereas Bitcoin sort of introduced the idea that we can have these internet native payment networks where the trade is the settlement and it takes place purely in an online environment. So Bitcoin and then different cryptocurrencies sort of were examples of these digital bearer instrument, immediate settlement financial instruments. And of course, the first decade or so was wrought with all kinds of different innovations and peaks and troughs and whatnot. But it definitely stimulated central banks to consider, how can we use this technology and apply it to our own digital currencies, to upgrade them for the age of the internet. I think it's lost on a lot of people that the internet is a relatively recent innovation, especially the speeds that we're experiencing today. In my lifetime, we've gone from basically the introduction of cell phones to now having high definition TVs where you can video call anybody in the world, which is quite an incredible innovation. And so I think it goes without saying that the financial system is sort of also being disrupted in this sense by the internet. And so, yeah, to point out some of the bigger forcing functions, and one of them that's actually missing on this timeline is the Bank of China. They started a working group, an internal working group. So if you go back to the journey, you think about investigation and internal working groups in the research phase, they started researching believe, back in 2014. So they were quite early. And this perhaps could have been because a lot of the Bitcoin mining activity takes place in China, and so it was on their radar quite early. And I think they must have realized, oh, this technology is going to come to disrupt the financial system. We better understand how we're going to upgrade our own digital currency or our own currency to adapt and evolve. And so that was early 2014, and you see a later sort of node here on the timeline, and the PBOC is now piloting the DCEP in a number of cities. I believe it's 4 cities with a number of banks and telecoms. So they're already piloting in 4 major cities, and I believe they're shooting to roll out in full at the next Olympics in 2022. The Bitcoin Libra white paper came out in 2019, and this was another wake-up call for central banks to recognize, okay, the private sector is now turning their gaze to digital currencies and looking to introduce digital currencies of their own. And so this was a bit of a wake-up call. Facebook is in operation, worldwide, and has I think over 2 billion users. So any payment system that's in any way associated with or interoperable with Facebook is, has quite an advantage when it comes to network effects. Access to that many users, it's really quite an advantage for any sort of network, and payment systems are no exception there. So, shortly after that, we see the G7 come out with a paper on stablecoins, and of course, the BIS has been doing some great research in the space, and ongoing surveys tracking all the work with the central banks. And so this was sort of to be expected. Then we see the Digital Dollar Project get announced at the start of last year. And that's really to get things going in the US. And I think for those of you paying attention, you've seen Jerome Powell and even Janet Yellen come around and acknowledge the sort of inevitability of a digital US dollar. As well, the first provision of the CARES Act, which was the first sort of COVID relief bill, had provisions for a digital US dollar. Of course, it didn't make it in. These are projects that take years, especially at that level. I think Christine Lagarde has said that the ECB's project will probably take place over 4 years. So they expect a digital euro sometime in the middle of the decade. But certainly the wheels are moving there. The World Economic Forum forms the Digital Currency Governance Consortium, and that's one that I'm proud to say I'm part of, and working on CBDC design principles there. And of course, we fast forward and we see the Bahamas launched at the end of last year. And then what's missing here at the end is our launch with the Eastern Caribbean Central Bank. So I'm actually going to click this. So I wanted to give a snapshot of some of the movement that's going on internationally, but this map really doesn't do it justice. So I have to give a shout out to our colleagues at the Atlantic Council. I'll just jump over to their site, and I would encourage anyone who's interested in getting CBDC efforts to check out atlanticcouncil.org/blogs. Well, maybe it's easier for you to Google Atlantic Council CBDC Tracker, but certainly it's on this site. And if you scroll down, they have this really great interactive map where, if we just go through the legend here, let me maximize my screen so we can see everything. So we're color coded here for no development, research, pilot, development, inactive, canceled, and launched. And you can literally hover over each of the countries, and you can click on them to get some more information about what's going on in these countries. So, Canada, I've been seeing a lot of job postings, and so it's clear they're in development. They're calling it a CBDC as a contingency plan. Seeing lots of job postings from the Bank of Canada for putting together a CBDC team there. South Africa, very, very much progressed. I haven't heard much out of Russia personally, but I trust our colleagues at the at Atlantic Council have done their homework here. Turkey, yeah. We have Japan that's always ahead of the curve, and so they've been experimenting for some time. Pilot status in China, of course. So you see the orange here. This all indicates pilot status, and I would recommend for anybody interested in sort of the wholesale element of CBDCs, the pilot that happened between Saudi Arabia and the UAE is called Project Aber. Really interesting one to look up, and how they're considering some of the sort of privacy mechanisms that can be used between commercial banks by opening up channels between commercial banks for some wholesale payments in CBDC. Of course, Thailand's in a pilot. So anyway, I could go over this for ages, but I'll sort of leave that to the viewers to investigate on their own. Again, Atlantic Council CBDC Tracker, really, really great tool. So props to them for putting that together. Just wanted to contextualize what BIT is doing in the space so that you can understand how I'm able to discuss some of this stuff with CBDC. So we've built what we call the BIT Digital Currency Management System. And the DCMS enables basically the operationalization of CBDCs and stablecoins throughout the economy through a design, deploy, and operate model. So at the central bank or monetary authority level, we have sort of a number of different products that enable the monetary authority to mint, issue, distribute, redeem, and destroy digital currency units. So all the key functions for a monetary authority. Now, the reason I use the term monetary authority because our stack is geared not just to central banks. Of course, we've specialized for central banks and CBDCs, but one of the trends that we're seeing now are, I think it's because financial institutions expect that central banks will take some time in deploying this, and they want to get involved in stablecoins, whether it's issuing their own stablecoin, so maintaining a reserve and issuing a stablecoin to the public for transaction, or to integrate into existing stablecoin networks, of which there are quite a few major US dollar stablecoin networks. I think the market cap is well over 50 billion. So that means there's $50 billion roughly in reserve that back up the same amount in US dollar stablecoins. So our solution is certainly tailored to central banks, but also applicable to financial institutions who are looking to either issue their own stablecoin or integrate into existing stablecoin networks or CBDC networks for that matter. And certainly that's part of what we're doing with the financial institutions in the Eastern Caribbean Currency Union. So at the monetary authority level, as you can imagine, there are plenty of controls and throughout and governance structures throughout the system. So we customize these governance structures to meet the institution. So whether it's certain types of transactions require M of N approvals, 2 of 2, 2 of 3, 3 of 5, whatever it is, we customize the governance structure in the system to and tailor it to the institution. Extensive monitoring and analysis tools for anonymized transaction activity. I think this is super important. Privacy concerns are absolutely a part of the design considerations for CBDCs. And so in our system, no personal identifiable information makes it on chain. And there are other features involved that sort of mitigate the risk of identifying any particular person on the chain. Plus, these are permissioned chains. They are distributed in nature by way of operation, but they are permissioned in the sense that very few individuals or firms have access to that raw transaction data. But if you were to see that raw transaction data, you would basically see a number of public addresses, which are just letters and numbers with no ability to tell who they're tied to, what identity they're tied to. Now, the central bank can tell based on wallet types. So they could tell whether it's a merchant wallet or a retail wallet. And in some cases, they could tell the industry and the region. But they can't identify it personally. So this provides a lot of really useful information economically. And this is for the purposes of sort of monetary policy implementation and monitoring and analysis. But again, privacy preserved for the end users. That's absolutely a design principle here. At the licensed financial institution level, definitely the ability to request newly issued currency from a monetary authority if we're talking about a CBDC deployment, managing digital currency balances across different branches. Same thing with the governance structures that we spoke about, so tailoring governance structures, and then full AML compliance capabilities, so KYC verification and ongoing transaction monitoring for the financial institutions to keep in line with their regulatory requirements. At the government level, we've built a digital currency operations manager for e-government solutions, so payments, benefits, distribution, as well as tax collection. So the government of Barbados is using our e-commerce plugin to receive payment for government services online. And those payments come in from merchants and consumers. So we've built a full merchant stack here, which is a point of sale application, an e-commerce plugin, and then a digital currency operations manager for merchant management, as well as a wallet app. And so these bottom level payments applications here for retail and enterprise, we brand them per the licensed financial institution that rolled them out. We're really a tech service provider. So we provide these to financial institutions to be able to roll them out to their client base. And here's just a snapshot overview. So this is an overview of BIT's architecture, and it's somewhat generic in the sense that this is also the marketplace model that the Bank of England generically defines for CBDC. So if anybody has read the Bank of England CBDC papers over the last few years, you'll recognize that when they refer to the marketplace model or the platform model as the CBDC. So we consider the transaction system right here, this middle box, transaction system, as the CBDC network itself. And then when you see all these locks, these are secure connections or API connections to different applications. And so you can see the payment service providers here and the financial institutions, they basically hook into the network via these secure APIs, and then they can offer authorized applications to the market. So that could be merchant solutions or payment solutions, or maybe they're integrating payment capabilities into another application, right? So this is sort of standard what we're seeing as far as the platform model goes. And then, some more of the mid or back office tools for financial institutions and AML compliance service providers and multi-factor, authentication. Over here on the minting system, we have a segregated minting system. As you can imagine, there's deep considerations for how to maintain authenticity and integrity of all digital currency units in the system. And so there's really extensive processes that we've put in for minting digital currency and the governance surrounding the minting event itself, and sort of the stakeholders that would be required to mint a new digital currency. I guess finally, so again, the platform model is meant to create more competition at the payments level, and it's doing that by reducing the cost structures for payment service providers and financial institutions. So whereas in the past, these institutions would have had to process transactions and settle transactions and maintain client balances and whatnot, now they can focus on user experience. They can have thinner applications because they're relying on the core transaction system to do all of the transaction and settlement. So that's just a high level overview of my experience in the CBDC space thus far. We co-founded BIT in 2014, and definitely we went full bore on CBDCs 2015, 2016. So Terry, if there's any questions or anything you'd like me to dive in on, happy to do that.
All right, thanks a lot, Simon. Much appreciated. Really good presentation. We will be coming back to you momentarily. We do have Kieran on standby. Let me just see if we can get her in here.
I am.
There we go.
Morning, everyone.
Good morning,
Thank you.
Kieran. So let me just introduce Kieran to everyone. Kieran is from the Eastern Caribbean Central Bank. She's Senior Projects Officer, Financial Institutions Coordinator, FinTech Working Group. And she's an experienced capital market professional who recently completed a specialized training program in this area, along with 14 areas of consolidated regional and international financial market experience. Her primary role currently involves implementing and providing advice on regional financial sector diversification initiatives focused in the area of fintech, Dcash pilot, money and capital market development, and sustainable long-term financing for renewable energy development. So welcome, Kieran, and thank you for joining us this morning.
Thanks for having me, Terry. It's a pleasure for the Eastern Caribbean Central Bank to be a part of this series that you've put on. And certainly I've benefited from a very rich conversation and presentations by Simon and your prior panel session. It was interesting to hear about the ECH. Ms. Ligo explain a little more on that, which I certainly think sensitization is required. So this takes me into the presentation on Dcash. And as Simon would have mentioned, we recently were, well, a month and a half post-launch date. So that takes us 6 weeks into doing the live deployment of Dcash. And with that, today here, I'm giving an overview of the pilot project. And Simon would have covered quite a bit on the journey, and most of what he would have presented applies to the ECCB's Dcash experience in terms of our development phase and the consultations we took. And what I must say is We did leverage the existing financial system architecture, meaning the key institutions in our framework, and are using the financial institutions, the incumbent banks, to certainly be a part of this enhanced digital finance environment that we're doing our best to deploy. And as we move towards the digital economy, as you know, there are several complementing initiatives that the ECCB is involved in on a regional scale. And this initiative would be our very first and quite a watershed moment, might I add, to have achieved that, to have a live CBDC deployed in a union, the first to achieve that fit. It was quite a integrated, complex, lots of close collaboration with our financial institutions. So on that note, I can move into the presentation. And I will share, just give me 1 second. And let me just ensure I have this up, okay. All right, somehow it's like I'm not seeing the screen.
If you want, I can pull it up from my end.
Yes, please. I may have too many screens up and running.
I'm very familiar with that problem.
You should have had it in presentation mode. Okay, so yes, so this picture, as I said, just speaks to ECCB's overall objective in terms of transforming lives, and our transformation agenda, Dcash, a digital currency, is key to that process. And what I would say, to provide better context, is that the payment system is central. It's an economy-wide good. The governor of the central bank, Governor Antoine, would have described the Dcash as a public good, and the ECCB is deemed to be best poised as the central bank and the sole regulator or primary regulator for the commercial banking system. And we know the ECCU is more of a bank-based financial system. So while we develop that system, we have to more or less work with what we have, if I could put it plainly, and look at how best we can introduce enhanced digital products to future-proof the banking system, more or less. So in terms of enriching lives, this is one of the key objectives we've undertaken. And today, what we will just look at, I've split the session in two in terms of what were our strategic objectives. Every jurisdiction has its own objectives in terms of what solution it is hoping to bring about, what frictions and vulnerabilities within the financial system they're hoping to address. And why are we doing this is more or less covered in part two. Any central bank would have to look at the broader picture. We do this now, and what is it enabling? What are we moving towards? What the potential is for growth and development and the future of the region. Here we're looking at, we've tried to keep it concise in terms of what are our strategic, more or less, imperatives for undertaking this pilot project. Payment system innovation is key, and as I would have mentioned, how important the payment system is across all sectors within an economy. And as we move into a digital space, when we look at the Internet of Money, Internet of Things, being able to operate in a digital marketplace, online payments, e-commerce, this is something that certainly there's a lot of room for improvement. I will not call it a challenge for the ECCU, but there is room for growth and there is opportunity. And with that, job creation and improving the ease of doing business. Central to that, and why the Dcash has come about, is in terms of widening access. And when we speak to our overall objective in terms of one of the key being financial inclusion, reducing financial exclusion is parallel to that, where there are many persons who would have bank accounts, but however, having sustained access to, how should I say it? I don't want to call it cheap financial services, but having sustained access to financial services speaks to the cost and the availability of that financial service. So you may have a bank account, for instance, think of a a tourist vendor who has their arts and crafts, who's part of that community, but lives in the rural or the outskirts and is not able to commute to the city just to conduct financial transactions, to do their end of day deposits, to receive payments, to exchange foreign currency. We want to ensure that those members of our community, of the citizens, they are able to access financial services, banking services at any time. So in terms of the current state of play, when we speak about access, fees are a deterring factor, and this gives you a snapshot what we've more or less put together a range of the cost of transacting. A recent survey, I would say, by the World Bank a couple years ago did look at the use of paper bills, cash and checks to conduct transactions. It's still about 80% within the ECCU. So predominantly, while there are mobile forms, for instance, the credit card, debit cards, persons still resort and predominantly use these checks and coins and paper bills to conduct transactions. So that comes at a cost, and transfers is another key aspect. The fees are exorbitant when we think about what it costs to transact intra-regionally as well as in the global community, where a key segment of that market would be our merchants in the ECCU, where they charge sometimes 3 to 5% on every swipe or every payment that they would have to pay those charges for the point of sale machines. And these costs are exorbitant when you think of it on a micro and macro scale. Next. So what is Dcash? It is a digital form of payment. ECCB has, via the Dcash system, which incorporates quite a bit of software and applications that were developed. We more or less made it a secure minting platform with the help of BIT, of course, who's our developer, technology developer and service provider. And we've created a safer, cheaper, faster way to make payments and transfers across the ECCU. So it is a blockchain-based central bank issued digital version of the EC dollar. And what I must stress, and we always try to show delineation with, is that ECCB is the sole governing authority, and ECCB maintains and remains as the sole issuance of EC currency within the ECCU. Whether we're doing it via the paper bill format or a digital version, the ECCB is the one issuing that digital currency. So customers or citizens have an option to hold both physical cash in their leather wallets or digital cash via a digital wallet which can be accessed via their mobile devices. So here you have enhanced options, and this is the beauty of being able to develop and provide and help with the competitiveness of the financial system. So in terms of the main features of the digital currency, as I would have mentioned, is smart devices that persons can facilitate access via that. Person-to-person access or transfers, you're able to transfer money to family or friends across the 4 islands for now. We are rolling out to 8, and that would be by the end of year. All of the ECCU will be able to undertake peer-to-peer transactions, business-to-business, peer-to-business, meaning paying merchants for goods and services. And what we really would like to stress on here is the privacy aspect, and Simon would have spoken to that the platform promotes privacy. Anonymity is another issue where persons see physical cash as being more anonymous vis-a-vis that digital version of the cash. Yes, both forms of cash carry their own level of anonymity, and to a certain extent, the digital currency will provide that. However, Simon would have touched on the need to, if we need to look into the data, we can, and that would be at the central bank level. No third party would have readily available access. And what underscores that is the need for financial integrity in the system. From that perspective, the ECCB does hold that it is a very high priority for us and for the entire ECCU, because a weak financial system would impact everyone in the ECCU. And another aspect I'd like to bring on in terms of our existing regulatory framework there were no waivers. So all the regulations and legislation still apply. We were able to deploy the digital currency within the current regulatory framework. And we're doing the pilot within that framework. In the future, based on what information and data we're able to assess from the one-year pilot, there will be consideration. And as we are currently going through payment system reforms, this data that we're now seeing in terms of feedback from the users of the Dcash system will feed into what the new payment system or the developments for the payment system, what it would look like. So this covers the access to the digital currency, where persons simply have to access this app via the stores, the app stores, and register on board with their financial institution to gain access to the digital currency. And persons can fund their digital wallet if they register via bank, via their savings account or deposit accounts. And you could also use physical cash to convert into your digital currency. Payment is a simple scan and pay, and that can be done remotely, or which we promote during these times in terms of the whole pandemic. Contactless payment is a huge aspect. So just based on the point I made earlier, we're leveraging the existing financial architecture. Across all jurisdictions within the ECCU, the Caribbean, globally, we see there's a large shift in digital financial services, and the digital financial architecture is key to that. So the Dcash, the digital currency, is paving the way. It's the first innovative product that we're offering within that. And ECCB is leveraging the existing system, where I will point out to here, we see the commercial banks and credit unions playing a key role. Added to that, we could go on to the next slide, Terry. We're expanding the ecosystem with new financial services providers, and that speaks to the widening of access to financial services. So at this stage, we have with us agents, which are approved agents by the Eastern Caribbean Central Bank. These are institutions which would be existing or licensed to undertake KYC and AML procedures in their current business models, and they are licensed under the Money Services Act. So we are leveraging those institutions who would be engaged in cross-border activity, like those who would money services and money transfers. There, in each pilot country, we have leveraged such institutions to provide that access to our consumers, persons who wish to sign up for the digital currency without the use of a bank account. The merchant teller, we are also leveraging the merchants within the ecosystem to help with the access to the digital currency. In terms of convertibility, moving to and from the currency is important as persons, and what we must see, we're not looking to get rid of physical cash. It will not be a cashless society, where ECCB's vision is to reduce the use of physical cash because it is costly, and just in terms of the distribution across a multi-state currency union does come at significant cost to the ECCU and not just the central bank, where we support all our ministries of finance and governments across the 8 islands. So bringing on new financial service providers within the digital framework is key to helping us build that ecosystem. Next, Terry. In terms of the efficiency of transactions, we are seeing that seamless transactions, instantaneous, meaning real-time settlement, that was a key requirement in rolling out the digital currency. And how can it be used in every day to buy your bread, your fruits, your vegetables? This is what we're promoting. And for it, it's a cash-like, it's cash equivalent, physical cash equivalent. It's just a digital version of that. So the usability and utility from the digital currency is equivalent to what can be done with the physical cash. And it actually offers more benefits, which we will go on to. We could take it to the next slide, Terry. So, and I would have mentioned, and in terms of what it can be used for, person to person, business to business. And this also, when we speak of business to business, we're also looking at government to government or person to government, meaning your ability to make contributions to your Social Security Board, pay your licenses, fees, and taxes. These are some of the current internal working sessions we're having with stakeholders on the ground, various social security boards across the region, as well as e-government service providers, the Customs and Inland Revenue. We're now bringing them within the ecosystem, and testing and training for that will soon begin, especially when it comes to our e-commerce functionality that is being rolled out within this week or next week, in terms of testing that new functionality with those merchants and service providers within the system. I'll just wait for the whole slide to come on. It just more or less reiterates or reinforces what I would have mentioned. Here we could look at the financial management and financial inclusion aspect I would have elaborated on. In terms of improved financial management, Dcash enables reports and records. So consumers at the consumer level, not just the merchant level, do have readily available 24/7 access to their financial records at their fingertips. We know most persons spend most of their time on their mobile devices, and with that, they're able to leverage, and this we hope will bring about a culture of more financial independence and management. Of course, Dcash, what I would mention here, there's no interest being paid on the digital version of the dollar. So we're not encouraging persons to withdraw large sums and maintain balances via the digital wallets. It's really for transaction purposes. Next. Please excuse me, I had a delivery at the door and I just had to tell them leave it in the balcony while I'm presenting, so forgive me. Additional benefits we'd like to underscore here in terms of reduced security, risk of security, where we see how the comparison between physical and digital cash. It's very simple. Transporting physical cash comes at cost for security, as well as ensuring transportability of that cash, not just across the 8 islands, but across branches within financial institutions. Now, with the digital currency platform, financial institutions can help fund their branch network at a click of a button. That speaks to operational cost savings and a slew of other benefits, which we'll look into later on. Reduced risk of counterfeit, and that means the digital version really cannot be forged of the EC dollar. So this reduces the that aspect and helps with KYC, AML, and counterterrorism financing. Instantaneous settlement, like we did mention earlier, real-time settlement within seconds, persons are able to transmit funds across to their merchants, to friends and families. And at our launch, if you do look on our ECCB Connects page, you will see where we demoed a live demonstration of settlement across the 4 islands, involving the governor and the different country heads in our agency offices. We're able to transmit payments to each other in less than 5 minutes. The new business opportunities and job creation, which I did speak to earlier, this looks at, as we said, we've broadened the number of service providers within the financial system from the perspective of widening access to the digital currency and in itself financial services. So that also brings about the need for jobs and skills in the digital economy. And we do see, even at the ECCB level, the need to hire experts and train and build capacity and training of our persons within on blockchain, on digital currencies, and to expand our own resource capacity and personnel as we're deploying Dcash. So that at the ECCB level, speaking to, goes the domino effect. We could see it across the region where we've trained multiplicity of employees and personnel across the financial institutions and their customer service providers in terms of service fulfillment and assurance is very important as we're deploying. So beyond that, we see the digital marketplace taking effect, and as we become more entrenched in the rollout of the digital currency, we're hoping to see how the digital economy within the ECCU would blossom. What we like to say at ECCB is that the future of the EC currency is digital. So when we look, we're now looking to the transformative potential for the ECCU in the ECCB deploying the digital version of the EC dollar. Next slide, Terry. Just a snapshot here of some of the pillars that within the ECCU we've identified. Different jurisdictions have their own pillars in terms of what their priorities are for the digital economy. And what I could mention here is that a complementary initiative currently ongoing with the World Bank and the OECS, as well as the telecom providers and regulators, the regional regulator, ECTEL for the region. They are embarking upon a regional project for digital transformation of the ECCU. The ECCB's participation is focused on the payment system aspect of it, and Dcash, where does that fit in? The ECCB ruled out the Dcash project, and this would fit in under digital finance. It would also fall under digital infrastructure, digital platforms and services, and as well as digital entrepreneurship and digital jobs and skills, as I would have mentioned. So it falls across all the 5 pillars for the digital economy that we've outlined for the ECCU. At the current stage of the project, we hoping that as these initiatives, for instance, digital ID, there's a current project ongoing on that, as well as payment system reform. The information that we will gather from the digital currency pilot project, the Dcash project, will help inform the deployment and implementation of those reforms. We're also working at the telecoms level, as I mentioned, in terms where we know broadband connectivity is very important as we become a more digitized economy. Alternative financing, and this is huge, and my involvement even in renewable energy financing, where we're looking at all these different forms of payment and ways to finance different sectors in the economy. Blockchain, we're seeing, can be leveraged, and this was a very key aspect that Governor Antoine would have identified, the use of leveraging blockchain to help with entrepreneurship and innovation and to build resilience within the financial system. So on that note, let's look at a closer look into what digital currency, why the digital currency? Payment system efficiency, we've delivered. We've shown that Dcash brings about, it's cheaper. The note here is that right now for the pilot, the digital currency can be used at no cost. And ECCB has every intention of maintaining the low cost, even when we're contemplating what commercialization may look like. A lot of persons ask the question, will it continue to be offered at no cost? For the pilot, for the duration of the pilot, it comes at no cost, 0 cost to merchants and to consumers. When commercialization does come about, we will be undertaking working sessions, working groups, requirements gathering to see what would the price point and what fees can be applicable, as well at the financial institutions level, whether they may choose to customize the digital wallet. All these are possibilities and things for consideration, future consideration. Cross-border transaction is a major benefit of Dcash, where we're seeing the hope of increased intra-regional trade. And this would certainly help boost economic activity within the ECCU. And even in times of COVID now, let's look at, or even the more recent example of the volcanic eruption in St. Vincent. We're now expediting rollout in St. Vincent, but persons who are from other territories who would have gone to St. Vincent and may have a digital wallet see the benefit of being able to transfer funds seamlessly to their friends and family directly without the need for delays or waiting 2 days or 3 days for clearance of a check, or even for transfer to go into effect, where they're able to transmit those funds at a few seconds. So in reducing the use of cash, we did look at what benefit that would bring about. And the slide prior did show the cost of services currently that we're hoping will be a lot more reduced as we move along and help develop the financial system. Inclusion by digital enablement, which is what I would stress here, the new service providers and the new types of financial services that are being facilitated via Dcash. will also speak to the enhanced affordability. So persons may have a bank account, but how readily accessible can they access and conduct transactions 24/7? On a Friday, you will see a long line across certain banks, or by a certain time, certain services are cut off. With your digital wallet, you have access and you can transfer funds. So at that very micro level, we've provided persons with that option and ability to still conduct and manage their finances at any point in time. Promoting innovation and competitiveness, I would have spoken on that. And data analytics, this is certainly a place for development within the ECCU. And this is one of the aspects of the Dcash that we're hoping to study and get some more information on to see what the next step will be. To put it simply, when we speak, when we look acutely at the financial system, simplifying regulatory compliance, operational efficiencies, some of which I would have mentioned, and access, control, safeguards, and data protection. We know in terms of the risks, there are leakages in terms of even cash leakages. There are, in terms of manpower, when you look at the compliance function, financial institutions spend millions. Their budgets are very large and it's growing because of all the due diligence and the new compliance requirements that are being instituted. So Dcash, based on the underlying technology, does provide that option. Disparate laws, for instance, taxation, AML, the possibility of a shared KYC network. Right now, for the digital currency, the KYC or AML network that we have, the utility platform, is not shared. It is within the confines of the current legislative framework. However, there is room and there are lots of benefits to be gained from having a shared KYC network. When you speak of the ECCU, the region, and how we conduct business in terms of the ease of doing business, not having to each financial institution that you visit submit credentials or be your credibility to be checked. So we have at the ECCB, when I say we, at the ECCB, quite a few initiatives coming on board, which will help us explore and leverage more benefits from the underlying technology, which the Dcash is being built and offered on. The other underlying factor here would be auditability and traceability. The transactions via the permission-based blockchain, which is the Hyperledger Fabric and blockchain on a whole, cannot be reversed. So the audit trail is there. It makes, in terms of the regulatory authorities, if there's need to do any sort of investigative work, it shortens the time frame, it reduces manpower, cost, and the list goes on when we think of what the benefits could be when we're ensuring the security, soundness, and safety of the financial system. Next slide, Terry. Possibilities when we speak of the real-time cross settlement, we've shown you, and I've mentioned it, in terms of the digital cash, Dcash platform, being able to facilitate real-time settlement. The hope of a unified payment system network sometime in the future, as we know there are one in every, 10 central banks or more, 80 or so, globally pursuing or either be it research, development, or piloting a digital currency. As the technology becomes more in higher use, I should say, as it is used, and there's a prevalence of it across the globe, this may give rise to the need of a unified payment system network. And even at the sub-regional level, if that would be the first next step, when we speak of even the CARICOM or OECS level, where it may facilitate that sort of settlement, cross-border settlement or large value payment settlement, be it between central banks or banks. And that also speaks to currency exchange, multi-currency swap, or bilateral arrangements, which will become a lot easier. An integrated RegTech or subtech solution, certainly blockchain offers a lot of benefits for that. And with Dcash being that first digital product we're offering, there is room for us to improve our regulatory technology when we're in terms of the bank supervision and examination and regulation. An optimal regulatory framework will certainly be, as we are actually undergoing some research and at the policy level for what an optimal regulatory framework for the ECCU could look like, and blockchain leveraging it in some way certainly is a topic of discussion. So in building resilience, expediting payments, we see the benefit of what the Dcash can offer and has been offering over the last 6 weeks. The harmonization of laws, we see a lot of fragmentation in our financial system. So there is an opportunity, as I said, to help bring that about via the RegTech and SubTech frameworks. The digital economy is the big picture. Trade facilitation, intra-regional trade. We also see the need for alternative financing mechanisms and payments being central to every economy in every sector within the economy. How to make a payment, this means how things move in the economy, how activity takes place, how soon. The ease of doing business is a huge issue when you speak to entrepreneurs, sole traders, big businesses like the merchants, and even me and you, the consumers. Considerations that have to be underscored when we're, even when we were undertaking the requirements and development, it took quite a bit of iterations, looking at what is most suitable for the pilot and what we would need to leave for when we consider rollout and implementation, full deployment and operationalization of the Dcash and interoperability. Being able, as I said, a lot of systems are being built. A lot of central banks are looking into digital currencies. With these silos, this could bring about new issues to consider. Now the conversation has to start where those developing, each jurisdiction needs to ensure that they have systems that are, or softwares that are interoperable. Otherwise, it will be a replica of what exists. The sovereignty issue is another aspect where, which would factor into this whole unified payment system network and how interoperability standards are dealt with. Cybersecurity is one of the major risks. And with the Dcash platform, we've ensured and incorporated various safeguards to ensure that our software and application is very sound. So there were cybersecurity assessments, risk assessments taken at not just the pilot or the development level, but the institutional level, meaning the banks along with the ECCB, to ensure that when they plug into the Dcash system, that it does not introduce any more risks into the current financial system. And with that note, we decided at the pilot level not to integrate the systems at this time and see what the Dcash pilot would look like. So for the year that we're doing deployment, we will be conducting quite a bit of consultations and working groups on the core banking systems, what integration could look like with as the deployment is being done. In terms of a possible picture of the future, as I would have mentioned, one of the visions for the ECC is to reduce the use of cash. We're looking at doing that at least by 2025. Offering enhanced payment options like Dcash will bring about a multi-channel payment system that will facilitate and help leapfrog into the digital economy. As if you look at the 2019 column, we see that, as I mentioned, cash and checks are still heavily used. And what we're hoping to see is a reduction in the use of checks. And we're seeing increased use of the digital currency and a similar reduction in the use of these more expensive options, cash, checks, so credit cards. These are already electronic payment methods. We're hoping to see a high uptake of those alongside the digital currency option. So with that, I'd like to say thank you. And of course, I'm looking forward to the question and answer session. Thank you, Terry.
Thank you very much, Kieran. And between yourself and Simon, I think you've covered a number of the key issues. And I see some of the facilitators for our next session coming on already, and they will have been very interested by these two presentations, as they'll be looking at the whole concept of cybersecurity, and they will certainly be looking at cybersecurity as pertains to payments, which is, as you would have heard Philomena talking about, is one of the key things for consumers when they consider whether to embark on using electronic payments as opposed to any other form of payments. So thank you very much for that. We have a number of questions already coming in, so let's dive straight into the Q&A. Ranking is saying that digital currency has been mentioned throughout the presentation. Does that mean users will have the ability to pay for Dcash, for the digital currency Dcash offers? What is the name of this digital currency? What is the exchange rate? I think he's perhaps referring to a broader digital currency across the Caribbean-wide currency, perhaps, or is it only a wallet where users can transfer funds from their local bank account to their Dcash account, which can be accessed for payments via the app? So, Kieran, I think you can probably lend him some clarity there.
Certainly, and thanks for the question. It does cover some key points that I would like to provide clarity on. Dcash is the name of the digital currency that the ECCB has deployed. It is a digital version of the EC dollar. It is one-to-one parity and holds a similar exchange rate with the for the US. So persons could use US cash or EC cash and convert it to the digital, to Dcash. Let me start saying more, Dcash, and fund their digital wallet. Consumers have two options, two types of wallets that they can choose to establish. We have the registered base wallet, where you could establish a Dcash account via your financial institution, or you could open a value-based wallet where you do choose not to link it to your bank account, and you just more or less like a top-up, you could fund your digital wallet. These are the limits. The difference in these two wallets are with who you sign up and the digital wallet limits. So once you register for financial institution, it will be a registered base wallet. The limits are a lot higher. There are no the KYC requirements are the same as you would. So banks currently, if you call one of your banks, we do have a list of banks. We have 12 banks which have enrolled in the digital currency pilot so far. And that's across the ECCU ranking. I believe you would be in St. Lucia. So we do have Bank of St. Lucia and First National Bank currently offering that product. And we also have the value-based wallet. We have agents in St. Lucia. Capital Financial Services is an agent, and they're offering the wallet. The lower limit would be 1,000 cash or 2,700 with the value-based. It's for persons where we're looking at, it helps with the financial inclusion thrust, where persons may choose who are not part of the formal financial system or just may not want to link it to a bank account. They can opt for that value-based lower tier wallet, which the KYC requirements are a little less, where your identity verification is what you would need to supply to that agent to establish that lower limit wallet.
So that answers that question. He's also asking, will there be a more effective and efficient way for users to connect bank accounts to Dcash digitally online? Currently, customers, of course, need to contact their bank to connect to their Dcash account. Is that going to change? Is that something that is envisioned as being part of the process that will transform going forward?
Well, you have two options. You could leverage your existing bank account, and where it is that what I mentioned at the presentation at the end is that the systems are not integrated. We're leveraging the banking financial institutions, credit unions as well. So you could call on those and get an invitation code and just set up your wallet. All you'll be using the financial institution for is if you need to transfer funds to your digital wallet or to transfer funds out and put it back onto your savings account. So otherwise, if you want to do peer-to-peer transactions, that does not need to go through an intermediary, through your commercial or bank or credit union. The alternative option would be for the value-based, where you just fulfill your KYC requirements and maintain your digital wallet. In terms of funding, withdrawing, you manage all of that. And that goes across both types of wallet. So in terms of there being alternative broader options for that, these are the two types of wallets we're rolling out for the digital currency for the pilot. And I based on literature and what is going on in CBDC world, I'm definitely not sure that there will be a variation to be brought on. Simon can certainly jump on there based on where the future is going for CBDC. And it's very effective so far, what we're seeing.
All right, and lastly, will ECCB introduce an e-commerce component to Dcash, and if so, what's the timeline for the release?
Certainly, we're actually testing that e-commerce functionality with a few merchants. Yesterday, we were at a program level management meeting where we're identifying some key merchants to test the functionality of what we've developed with Bit so far for the e-commerce aspect. So yes, we're hoping to roll that out very soon.
Yes, Simon has spoken as well about the potential for CBDC wallets for inclusion for those without a bank account. I think that's something that you touched on as well, Kiran, and he spoke to the fact that in the chat that payment applications can be made available in app stores by payment service providers or other licensed financial institutions. I know that that's a conversation that's being had in Jamaica, certainly to a substantial extent, and in the Bahamas as well. Do you see that as being a substantial problem in the ECCB region, in the ECCU region?
I didn't quite get that question.
The concept of the CBDC catering to the unbanked and broadening financial inclusion. I know you spoke to the fact that it does broaden financial inclusion, but do you see that as being a specific problem for the ECCU region, the volume of unbanked persons?
Well, it is a specific objective of ours, financial inclusion, and which is why we've brought on more service providers, new types of entities to help widen the access to Dcash. We have persons, you do not need to sign up with a bank account or through a bank. You could go to an authorized agent across the islands. We're ensuring that we have at least 1 or 2 agents for the pilot phase at least operating, where you can go and establish that digital wallet and begin using Dcash for your everyday activities. So it is certainly a very high priority and one of the key aspects beyond reducing the frictions where we look at the cost of financial services. With that financial inclusion those efforts at helping to limit financial exclusion, we're hoping to, via those agents, build the level of access and ensure that we have sustained access to banking services. So your Dcash is available 24/7 for any type of transfers that you would like to do. Think about persons at the credit unions. They would have to submit a request to a credit union, and the credit union would then be an intermediary, would have to use another intermediary, especially if it is an international payment or regional payment. Right now, at a click of a button with the digital currency, we looked at the design considerations and the way the infrastructure, the architecture is set up to ensure that persons have that better access or broadened access to financial services.
Right, and I'd like to ask both of you, but I'd like Simon to take the first crack at it. So we haven't heard from you in a little while, Simon, to speak to the question. I mean, we know why you've both explained why it is that CBDCs are desirable, but why is it, from your thinking, Simon, you've worked across the Caribbean, that the region has taken leadership on this initiative, has taken leadership on this intervention, and that we've seen these territories at the forefront of the thrust towards CBDCs?
That's a good question. I mean, perhaps it could be just the nature of the existing payment systems in the region and some of the reliance on the correspondent banking system. I think that certainly BIT's efforts with the Caribbean Settlement Network are basically, I mean, we've been talking about this, I think, since 2016, that the goal is to assist with the digitization of each country's currency within the Caribbean, and then to connect it via multilateral settlement network. And I think, as I mentioned in my presentation, the technology underpinning these financial networks has evolved so much over the last decade that it's actually making that a reality, and in a cost-reduced manner. So whereas in the past there was less, perhaps there was less incentive, but also less awareness of, and just there wasn't the technological solutions to enable that sort of roadmap, the digitization of currency leading towards a multilateral settlement network. And so I think it's something that the Caribbean has envisioned for decades. I think the revised Treaty of Chaguaramas in the 70s spoke about a multilateral settlement network for the CARICOM region. And so it's something that's been, it's been on the road, it's been on the Caribbean roadmap for some time, but it's just been, I think it's been difficult to execute for a number of reasons. And now the technology is accessible. It was built, in the region by the team at BIT largely, but given the nature of open source software, it's accessible worldwide. So borders don't matter as much right now for in terms of technology development. So technology is more accessible. I think with some of the Canadian banks pulling out of the region as well, you're seeing like that's its own market force that has a number of different effects. And so, yeah, I just sort of, I know that's a bit of a roundabout answer, Terry. There's a bunch of different considerations, right, that go into it, and it's hard to say. Again, it's an international trend, and I think that, Governor Antoine definitely was a visionary in looking into this as early as he did. And now, of course, it's being validated by, most of the major central banks in the world looking into it as well, and meaningfully moving forward their research and pilot efforts. So yeah, maybe not the most clear answer. I just see it as a sort of this multi-factor equation that sort of, its time has come, and I think central banks internationally are realizing that, the technology is out there to upgrade payment systems, and they're no exception. They're part of the economy, and it's time for them to move in that direction as well.
Kieran, you want to jump in?
Just give me a little overview of the issue you want me to touch on.
Yeah, so I'm just
Terry,
asking, why do you think it is that that the Caribbean specifically has taken leadership on the issuance of CBDCs?
Certainly, we have those that Simon would have given a slew of issues, and I'm picking the most, one of the most pressing ones for us, which I would have zoomed in on the presentation, is the cost of financial services. Yes, ECCB is the regulator for the financial system, and noting that we do not regulate fees. Enhancing the financial system architecture is one option, and their technology is the key. Right now, technology, not just in financial system, but across all sectors, can help. If you think of smart buildings and even in renewable energy technologies, we see how it's enabled us, small island development states. We had this limitation in terms of cost. We have a technology now that we can leverage that could make it a lot more seamless, cheaper, and efficient for us to be able to deliver goods optimally, efficiently, and build resilience within the financial system. So from an ECCU regional perspective, at the ECCB, we noted, blockchain, it's still very nascent. There was a lot of unknown, and when we commenced the collaboration and working sessions and requirements gathering with the banks, that took 2 years. Defining what blockchain was, up to there, there are several definitions going about what a CBDC is, lots of definitions. But when we looked at what is in it for us, how can we leverage this technology? What are the options on the table? We've designed a framework for Dcash that enables us to offer a very secure and safe digital version of the EC dollar. And as I mentioned, some of the issues for the ECCU were the cost of transporting money. Consumers may not realize it, but they do bear that cost when those fees do come across for their services. And just minting physical cash, ordering it, transporting it across the 8 islands, the time factor involved, the personnel involved, the coordination, the logistics, the costs do add up. That much I can disclose, and we've saved millions. We did an analysis, diagnostic analysis in terms of what it would look like over a 10-year if we are to reduce the use of physical cash by 50%. Of course, in deploying that, ECCB would have to ensure that there are safeguards. It does not compromise the integrity of the financial system. And this phase of development where we are at now, we're at live deployment, looking at how does Dcash help impact and bring those welfare gains that we're looking for. So for us in the ECCU, and I note even Bahamas, when you listen to them, the architecture or the design is quite, there are lots of similarities that we're looking at same. We at the ECCB level, we're dealing with 8 islands. Bahamas has several islands as well, but one currency and similar to us. So there are similarities we do share. And it is not a coincidence that those countries and even Jamaica is looking into moving into that space. So for us, transmitting funds, we had the correspondent banking issue, the de-risking issue, where while this Dcash is only for transfers within the ECCU for now, we do not know 5 years or 10 years, I would have spoken to a future possibility where we may have a unified payment system network, right, where the central banks can do transfers across each other, and that could be foreign exchange, help facilitate settlement 24/7, as opposed to those distinct business hours that we currently operate under. So there are lots of benefits in us moving into that space. And as I would have mentioned earlier, financial inclusion is one aspect. As we move forward to a more digitized economy and economic space, this is another important aspect where we look at competitiveness and ease of doing business. For sure, moving away from the block and mortar, physical buildings, these were large infrastructure costs that we could not bear. And this, of course, held us back in offering a lot of services, but now we're not, there's no need. There's lots of empty building around. COVID has shed more light into that aspect, that those large infrastructure that we would build, there may not be a need for it, and technology has been that key leveraging factor that enables us to move forward with those improved services in our financial system.
All right, thank you very much, Kiran. We have a number of guests from Australia on with us today, so we're going to move on very quickly. But let me just ask you one last question, and let me just take a contribution as well from Karen Richardson from CUB, Caribbean Union Bank. And she says, and excuse me, and I think this is in response to Rankin's previous question, that banks with integrated systems can give customers via internet banking platform, mobile banking, etc., the ability to transfer from account to Dcash and vice versa, without them having to contact the bank, much the same way that you can do an internal transfer, some of which is also covered by Kiran. But just finally, of course, this is a banking platform. We are the Caribbean Association of Banks, and we are, of course, beholden to our members. So let me just ask very, very quickly in perhaps 30 seconds, if you can encapsulate it within that time. We'll start with you, Kiran. What do you see as being the level of reception? I mean, obviously you talk about the number of banks that are already on board, but what do you see as being the level of reception from the banking fraternity going forward towards the whole idea of digital currency in the Caribbean?
I was on mute. Sorry. Thanks, Terry. Thanks for the question. It's a popular question when you think of from a financial stability perspective and disintermediation. And the banks have been very close collaborators. They've been part of the design for the infrastructure that underlies the digital currency. And the uptake has been tremendous. They see the value. We have their full support and commitment. And it has been so from day one. And even now, they are some of the biggest ambassadors that we have. Currently, we're deploying some education and awareness that we are going to be doing directly through the banks. They're a central part of our financial system, and that will remain. So it's about future-proofing banking, and they recognize the benefit in that and have been on board and have been very close partners with the ECCB as we've been deploying that innovative technology.
All right, finally, to Simon, just very quickly, I know you have a hard stop in a couple of minutes. What do you see as being the future partnership between commercial banks and central bank digital currencies?
Yeah, I think it's another, it's basically a payment rail that's going to help facilitate more cost-effective transactions. Yeah, I think that there's definitely going to be challenges in terms of perhaps adjusting bank funding rates and some of these other legislative or regulatory requirements. But I do think it's meant to be a powerful new payment network that sort of assists in processing transactions both domestically and cross-border. So certainly, I think there's ways for the commercial banks to participate, reduce their own cost structures, and gain access to more international payments networks as well. So I certainly think that there's it's a net positive for all the stakeholders involved.
All right, thanks a lot. And thank you so much, Simon and Kieran, for your presentations and your participation this morning. It was very much appreciated. And I think we have come away with a much deeper understanding of where Dcash and where digital currencies in the Caribbean sit and where we want to see them go in the future. Thanks much.
Cool. Thank you for having me, Terry. Appreciate it.
Right, and now we'll switch right into our final session, and this should be very, very interesting. And in our last session this morning, we will be talking about cybersecurity, psychology, and technology. During the pandemic, we've seen a number of cyber attacks in the Caribbean, some on the banking system. And we're pleased to have with us today the team from Digital Financial, a boutique consultancy dedicated to addressing the regulatory, management, business, and technical needs of clients at every stage of digital transformation and in every corner of the world. And like I said, we have a number of partners here today from Australia. Their expert consultants have decades of experience working with a wide range of organizations on the support and provision of cutting-edge financial services. They have dealt with financial institutions of all stripes and sizes, from fintechs to domestic, national, and global banks, credit unions, payment operators, development organizations and foundations, standard setting bodies, government, central banks, transit providers, retailers, telcos, and IT firms. So without further ado, I am delighted to hand over to Lisa Skinner of Digital Financial, and David Medine will in fact be leading the conversation this afternoon. So ladies and gentlemen, over to you.
Hi, thanks, Terry. Just a quick update. Actually, today we're going to be being led by Paul Macon, who has a great deal of knowledge in all of the topics which have come ahead of us, payment systems, central bank digital currencies, and a real focus on the security aspects, the financial inclusion aspects, and the efficiency aspects of these things. Our consultancy is a group of senior experts. And in order to give you the benefit of their knowledge, what we're going to do is a very, very short presentation deck, and then leap right into a roundtable and question and answer. So please use the question functions. This is your chance to ask people who have been involved in forming the regulations which are involved in digital transformation and digital services. These are people who have developed digital products. We have a gentleman with us, Leon Perlman, Dr. Perlman, who's an expert in the regulatory aspects of central bank digital currencies. So lots of good things to tie into what we're doing. Terry, could I ask you to start the deck, and Paul and I will go along with you. Hi, Terry.
Terry is taking a break.
Ah, yes, he is.
All right, I stepped out for 30 seconds and you missed me.
And you got caught. Would you start the deck for us, please, Terry?
Let's just open up here.
I was delighted to see that amongst attendees, we have people from the regulatory side as well as from the bank side. So I think that will allow our conversation to really cover a range of aspects here. And our team that we have today, oh, there we go, great. Yes, we have Dr. Louis de Coker coming in from Australia. We have my co-host Paul Macon coming in from Glasgow. And the rest of us are right now in Canada or the United States. So next slide, please, Terry. I'm Lisa Skinner. I am the managing partner of Digital Financial. I am not a security expert, but I have a wide range of interests in the provision of digital financial services, particularly with a focus on financial inclusion. I am going to be partnering here with Mr. Paul Macon, who covers just about everything. We refer to Paul as a digital pioneer. He was involved in the original implementation of M-Pesa in Kenya, which sort of started the whole ball rolling. And he's now gotten very involved with issues of digital identity and security, and with the idea of interoperable payment systems. Next slide, please. On the panel, I have David Medine, who focuses on privacy, data protection, cybersecurity, and consumer protection. He is really on the side of your customer. He has a wide range of experience in helping to create approaches which protect people's privacy while giving them access to services. And in particular, he's been recently involved in the creation of cybersecurity resource centers for developing countries. I have Diego Rivera, who is a user design specialist. And he is here to answer some questions about how to make the interaction of your customer and your staff with your security requirements a more friendly and efficient event. Next, please. Do notice Jeremy Skinner is my brother, and he is a technology architect with both technology provider experience and bank experience. And we're going to be aiming a lot of questions at Jeremy about how do financial institutions from a technical and architecture governance manage to maintain privacy and security in the digital age. And I'm very pleased to have Dr. Leon Perlman, as I've mentioned, expert on blockchain, on infrastructure security, on the linking with digital financial services and telecommunications. And Dr. Perlman, along with the next gentleman, Dr. Leon Coker, Dr. Louis de Coker, have been involved in the creation of payments regulation and legislation in a number of developing countries. And sorry about on your name, Louis. Dr. de Coker is coming to us from Australia, where he is in charge of the RegTech program at La Trobe Law School. And he is a financial crimes policy consultant to the consultative group to assist the poor. And his focus is on maintaining the balance between regulation and financial inclusion. And he is an expert in the questions of the appropriate level of regulation that needs to be required and in collaborative due diligence. So there's lots of issues that were brought up about eKYC and onboarding, and I believe Louis will have some real insights into this. Next slide, please. Today's format, we're going to be really short on the presentation piece, and it's going to be a roundtable between these gentlemen and any of your questions. Please fire up your questions. We'll take them as they come. Everyone on this panel are expert at what they know, so it really is an open session. And next slide, please. A few ways to think about cybercrime. And Paul, please feel free to chime in here. But law enforcement agencies often define the cybercrime by its relationship to technology. So they think of, is your technology the target, or is your technology the instrument? And one of the things that's interesting about this is when you think about technology as an instrument, these tend to be sort of things that could have happened without technology, without the digital channels, but they've just become easier. Mainly because of the speed with which people make decisions when they hit an email or a text message. And when you think about technology as a target, this is now thinking about, okay, you've put all of your information in one handy place. And from the point of view of a cyber criminal, that is a wonderful opportunity. I want to note here to just remind everybody that cybercrime is big business. This is no longer just some one person sitting in their basement in front of their computer. If you read about this, the big ransomware groups, Maze, Reveal, Lockbit, they actually have hackathons on the dark web. They award prizes. They sell ransomware as a service. So if someone who is within your ecosystem wants to infiltrate your institution, they have a very good chance if they partner with one of these literally ransomware service providers.
You could also divide it by the size of the target. So, for example,
Sure.
you can talk about ransomware essentially only being aimed at institutions that can afford to pay a large ransom. It really isn't worth your efforts otherwise. So banks, for example, are primary target, but also critical utilities. Or I have heard that the people who direct ransomware attacks spend a lot of time looking at the financial results of individual organizations and target accordingly. No point ransoming somebody who can't pay you. Whereas the technology is instrument attack, phishing, business email, etc., they're often targeted at smaller prizes, so a few hundred or a few $1,000s. So it's a difference in scale.
Sure.
So I think it's important to recognize the difference there.
And I also think, Paul, when you think about the idea of data theft, this is where financial institutions and frankly healthcare services are prime targets because of the detail and quality of the data that is as a target.
Yep.
Now this next slide is talking about that some crimes are often updated versions of classic threats that financial have dealt with for years. The idea of extortion, ransomware is cyber extortion. The idea of direct monetary threat. So there used to be a time when your main worry was were cash delivery is going to be intercepted. Well, now you're wondering, are your digital transactions going to be intercepted? And from the customer point of view, it's moved from being direct robbery. You've gone to the bank, you've walked out, you've got money, to this idea of your information being skimmed, your PIN number then being used after you've gone, your password being used to access funds, you being asked to make a transfer to someone who is not the intended recipient. And then data theft and corporate espionage, right? This indirect monetization of the crime. And sometimes this is straight up to be used in order to simply transact and gain money. Sometimes it's for political purposes. Sometimes the information is used to create things like synthetic identities, which we can talk about, where someone slowly is built up to be a very real looking person, like on government services and everything else, and essentially hard for a financial institution to realize is not an actual person. And next slide, thanks. And if you're online or interconnected, you're a target. So it's not just what you see in the Caribbean. Of course, we've all heard about the Sony Lazarus attack, the attacks on the US Department of Defense, and the very recent and in the news situation of pipelines. If you're online, you're a target. Next, please. And this is something that we're going to talk about. I'm sure it's in everyone's mind. Outsourcing on its own does not solve the problem. Paul, do you want to have a few words on this?
Well, when you outsource, obviously you do it for a very good reason, but you do make yourself vulnerable to the cybersecurity of the organization you've outsourced to. And the regulator isn't going to come along and say, it's okay, Mr. Bank, because you didn't do it. It was that other organization that you outsourced to. So it's fine. They're going to hold you responsible. And then you are left to try and get some restitution from the organization you've outsourced to, which may well have just been bankrupted by the ransomware attack, for example. So you really need to do your due diligence, and you need to rely on trust and the reputation of the organization you're outsourcing to. But in an organization such as SolarWinds, it's the very high profile attack against SolarWinds, I really don't know how due diligence would have protected you against SolarWinds. And there's an awful lot of global organizations that have fallen foul of that, far more than have been publicly acknowledged. And that's one of the issues that we have with cybersecurity. The big victims, the ones that really suffer the major losses, you never get to hear about them because they don't want the reputational damage of admitting that they have lost substantial amounts of money or whatever other asset they might have through an attack of any sort. We need solutions to this, and hopefully the panel will have some later.
Thank you. Next slide. One of the things that we are going to talk about here is the link between technology and psychology. And psychology leads technology. If you don't have the right mindset, you're not going to ask the right technological questions, and you're not going to put the right technology and processes in place. I've got a laundry list here of important things in terms of customer education and staff training, planning for disaster. You know, if you are thinking about what happens with ransomware, what are you doing to insulate yourself? What are you doing in terms of your processes, your backups? Are you firewalling off enough of your institution that you can continue to function? Next slide, please. So protect your bank. And over 75% of successful cyber attacks gain entrance through a human action or a human inaction. So one of the main questions is, do you have standard and ongoing staff training? And do you talk about subtle hints when you get changes in login pages and screensavers, when the color's wrong, the spelling's wrong? Well, when you get an email from someone in your institution who would never normally email you, when you're referred to by the wrong name. We've got a gentleman in our organization whose name is Charles Philip Broom, but he always goes by Phil. If he got an email going to Charles Broom, that would be a really good hint that something's amiss. And when you change something, do you let your staff, do you let your customers know? Are they, or does a change come through and it happens and no one's notified, and therefore when there is something that's amiss, no one knows whether it's an actual attack or whether it's just they haven't been told that the organization has changed their user interface or the appearance of email? Is your chief technology officer, chief security officer and his team independent? Are they seen as such? Are they trained to deal with anything that escalates to them in a sensitive way? And this is when I talk.
This is absolutely a vital point, I think, yes, Lisa. The CSO really has to have a direct line of reporting to the CEO. If the CSO is reporting to the IT head of IT or the CIO or whoever it might be, then that takes it away, and you're subject to the budgetary limitations of the IT department, etc. And it's quite often, I'm sure we've all seen it, that the CEO has no real understanding of the cyber risks that the business is subject to. There has to be that direct line of reporting to the CEO by the chief security officer.
Yeah, I think that's a really good point. And that chief security officer, he or she needs to inculcate this attitude within the whole team, that there's no such thing as a foolish security question. And there's no such thing as something that is too embarrassing to bring forward to them. This has been a trick in a lot of these email entrance attacks, is that the email is about something that the staff member would feel embarrassed to talk about and to bring up to their chain of command. And so there has to be some way of doing this in a non-judgmental manner. One of the companies that I'm aware of, an insurance company, what they have on their staff email is that there's literally one of your choices before you even open it is to send it to security. And off it goes, it's firewalled, someone is alerted and it's dealt with. And it's so simple that it just lets you then go on with the other things. Your staff member can just go on with other things they need to do, secure in the knowledge that the problem's being dealt with. And if it isn't a problem, that they're going to get the email back with clearance from security. And
I'll tell you one thing, Lisa, that an example of staff training and staff awareness, it has to go beyond cybersecurity. You have to have a cybersecurity mindset. There's one example I came across actually with one of the biggest transaction processors in the UK. They had the requirement to put cameras in to monitor the staff in the operation center. People who are responsible for monitoring and correcting transactions, you know, the type of thing. And the people who came and installed the cameras installed them so that they were looking over people's shoulders down onto the screens that they were using. And this immediately raised the risk, of course, because you only needed to hack into the video server, wherever that was, in order to see people typing their passwords and to see what data they could access on the screens at your leisure. So it's an obvious thing, but it needs a security mindset right from the beginning. It's not something you tack on at the end.
Right. Thank you, Paul. That's kind of scary. And then the idea of protecting your customer. This seems basic, but it's often not very well done by financial institutions. So are you clear to your customer about how you will communicate with them? Do they know that you're not going to send them a text message, that you're never going to ask for their password? Has this really been expressed throughout your customer base? And does your customer have a fast, easy way to report a problem? I was on the website of a major international bank, and I couldn't believe how long it took me to find out what do I do if I think I've got a suspicious email or a suspicious text message from this bank. And then I get on the page, and the first thing that they tell me is that I will be reimbursed essentially if I can prove that I, the customer, have followed all of the appropriate security requirements about my password and my communications. And right away, it's setting up a situation where your customer has to take a lot of time and to report to you, feels that maybe they just shouldn't report it because it's going to raise questions they don't want to answer, all of those things. And then once the customer comes to you, is that first person that they contact trained to deal with the problem, trained to actively listen and not assume what's happened, trained to say, yes, we are going to escalate this. Thank you, you've done the right thing. Or is it just treated as, send us an email and maybe if we get around to it, we'll send you something back. And then my last thing is the services you offer to your customers. If you're offering things like two-factor authentication or these other very useful security features on your digital transactions, have you made this easy for your customer to understand? And we're going to talk a little bit about designing those sort of things in the panel. But if you just roll out a security feature, all of a sudden there it is. The effect on your customer is to make them say, why do I need to do this? And that's not a good situation. Paul?
I completely agree. There are two things that I was thinking of when I saw this. First of all, I was subject to an attack about a year ago, and fortunately, I was sufficiently savvy that I immediately got onto my various mobile banking apps and suspended all transactions instantly. So I only lost $100, and because I'd done that straight away, the bank actually refunded it. So I recovered. I actually lost nothing. But I find it hard to believe that most people would be sufficiently fast acting to do that, or would even know that their mobile banking app allowed them to do that. So I've never actually seen any training about that or any information about that from the various banks I'm with. Sorry, I work in the financial sector, so of course I've got bank accounts all over the place. But we need to make it clear to people, you know, if you think there is an attack, stop everything. First thing you do. I do think that services such as two-factor authentication are important if done well, but quite often they're not. And in many cases, they add extra vulnerabilities because they give a false sense of security that just isn't there because of weaknesses in the implementation, for example. I feel sure that Leon will have something to say about that shortly.
Next slide, Terry. So it's a balancing act.
Yeah. There's no point in innovating. There's no point in driving forward on financial inclusion if you don't sort out the foundations. And the foundation is ultimately cybersecurity. You've got to be confident that your service is reliable, secure, and people can trust it. Because otherwise, the more you innovate, the more people are going to actually move away from your bank because they just don't feel their money is secure. And if there's one thing I want from the bank, it's not giving my money to other people, please, unless I ask you to.
So now we're going to go right into a roundtable. I've got some lists here of some things that we'd like to talk about: trends in data protection and privacy regulation, innovative approaches to KYC and onboarding. Earlier in the session, I know that there was a lot of reference to digital onboarding, eKYC. I'm sure that we've got some people on the panel who can really talk about that. Improved identity authentication authorization for everybody, for your customers, for your staff, for your vendor partners. How are you dealing with that? The idea, as we've spoken, ingraining a security mindset across your institution. And then sort of getting into the nitty-gritty, some of the processes you can think about. Rigorous reconciliation, which allows an institution to notice when something is starting to go wrong and notice quickly. Maker-checker rules, security audits, penetration tests. What's the value of these for your institution? And why do you want to contract that you know that your third-party providers are also subject to this sort of scrutiny? Firewalling and separated backups, the idea of domains of trust, and all the problems that are coming up around remote access tools. It's been very interesting to sort of see what's happened with, first of all, people working from home, and then they need some help with their technology. And now you've got a link set up that allows actual control of that person's technology. How are you dealing with that? Because there's been a couple of very sophisticated attacks that have made use of this kind of a tool. And then the last thing is an idea of a shared service model. So that smaller institutions can band together to be able to afford the things that they need in order to really protect themselves and their customers. And we're seeing a lot of this around the world, especially in ecosystems like the Caribbean, where there is a diversity of smaller institutions. I know we're really talking about banks here today, but this is certainly something that would also be useful for credit unions and for microfinance. So I'm putting that on the agenda for the discussion. And please use the question and answer. We've got lots to talk about, and we'd be very, very happy to take your questions. And Paul, can I ask you to take it away?
Sure. Thanks, Lisa. It's good to, I think a roundtable discussion is the best way of doing this because there's so many areas, and cybersecurity is a huge, complex area. But there's aspects of technology. Obviously, that's the first thing that comes to people's minds: computers, networks, mobile phones, etc. But we also have to touch on issues of consumer protection, data protection. People are at the heart of this, and actually, physical security gets forgotten lots of times, and we can't afford to if we're going to do cybersecurity properly. We've only got a limited amount of time. We can only touch the surface of this subject today, but our panel of international experts are more than equal to the challenge. Now, in recognition of the fact that for Dr. Louis De Coker, it is currently so late that it is tomorrow already, I think I'd like to address a few questions to him first, and then perhaps allow him to leave. So Louis, perhaps you can give us your thoughts first about cybersecurity and technology. The view is often that technology leads the way, but how much is it really about people?
Paul, I think you did a splendid job, Lisa and Paul, with your presentation and positioning the importance of people and of training. And so easily people think about cybersecurity and they get focused on the technical stuff. But I think you've highlighted the importance of recognizing human vulnerability. I want to lift out perhaps one aspect of that should also be considered. Training is great to upskill people and to make them understand what they need to do. And we understand the vulnerabilities around that and the behavioral patterns that make that difficult. But I think it's increasingly important to also recognize that there's an integrity vulnerability that can also be present in your organization. And as we improve systems and make it more difficult for external parties to penetrate systems, it becomes more attractive to secure someone on the inside, someone who has access, someone who has the passwords. And you secure those through enticements, so bribes, or through intimidation, if the integrity levels prove to be too high. And we've seen this with money. We've seen the vulnerability in small organizations to people working in accounting, especially those who aren't trusted. In the same way, we see vulnerability around people entrusted with managing ICT. And they're in a very powerful position because often they have technical expertise that's not shared by other people in the organization, and people look to them for guidance. And so therefore, what I want to position is also considering how best to secure the necessary levels of integrity internally in the staff members that will be entrusted with access to your most vital systems and with the security of those systems. And that's obviously complex. But if we look at the trends and the things that have happened, that is clearly an aspect that should enjoy recognition and should be addressed.
So you talk about the ability, the inevitable rise of intimidation or bribery or whatever it might be of your own staff. But one thing that has been highlighted to me many times in the past is that now we have staff with mobile phones. That makes it much worse. So how do we address that particular issue?
Firstly, by recognizing it as an issue. And it's surprising how long it's taken institutions to wake up to this risk. And it's great that you mention it. I was looking at a Verizon study that was published early in 2021. They interviewed 850 institutions. 40% of those institutions indicated mobile devices as their biggest current security concerns, especially coming out of the pandemic. So much more moved to homes and houses, so much more businesses being done by employees on smartphones. But interestingly enough, most of the ICT departments found kind of pushback when they wanted to increase security around mobile phones used by employees that would impact on the functionality of the phones. There was pushback and they didn't feel sufficiently empowered. And as a result, 90% of the respondents felt that they couldn't do the basic things that would be good to do is including ensuring basic encryption of data, ensuring password protection. Very few of them had training of employees around apps. So the level of awareness around the malware that's tucked away in many of the gaming apps was something that was not known to employees. So there's a training aspect, but there's also a culture shift required. The phone is regarded as something personal that's being used for business purposes, but while it's a personal phone, employees want to control it, and that creates a vulnerability.
I know that in some financial institutions, any operational staff, anyone in the finance department, you have to put your mobile phone in a metal locker at the start of the shift for this very reason. Do you think that's a bit too draconian?
Not at all, but that's only a starting point. How is email accessed by that employee when they're working from home? How many other systems do they have access to? If there's malware on their phone, how can that malware perhaps render that communication with the systems of the institution vulnerable? So yes, physical security, great at work, but you've got to think about the whole usage and access. To what extent is access perhaps limited? And silos built to protect your most vulnerable data against your devices used by employees.
Yeah. So working from home has actually exacerbated the problem.
It's certainly created more challenges.
Leon, that sounds like a great point to bring you in, actually. So with regard to transactions, traditionally, banks have kept it all in-house. They control the back office, the networks, the POS devices, the switches. Now with mobile financial services, someone else is providing the networks and the devices. How do banks maintain the previous levels of security for their customers?
Can you hear me?
Yes,
sorry,
I can hear you perfectly, Leon.
No problems today, but hi everybody, good seeing you all, and thank you for the invitation to participate. So I think in your introduction, Paul, you said a lot of what I'd say. So I'll repeat it with some variation. Is that banks certainly have challenges because the way things have evolved, it just makes it easier, especially with feature sets, for them to outsource a lot of their activities, and especially, as you said, with COVID, a lot of it, there's an extra level of intrusion, if you will, or potential intrusion, because people are working remotely. And teams are, from what I've noticed, teams are not within banks are not as working as tightly before because of the remote, those remote activities. You just don't get that sort of water cooler moment where people discuss a particular issue that needs to be dealt with almost immediately. So that closeness creates a vulnerability, if you will. So the pandemic has had some long-term implications. So I think where the greatest vulnerabilities come in, and you mentioned that, is in the cloud infrastructure. But as the SolarWinds showed, it goes beyond that, beyond just cloud. It goes to the entire supply chain, of which banks are not necessarily, or for that matter, anybody. Even the US government was affected. Even Microsoft was affected. So if Microsoft is hacked, what chance for 100% protection for even a large bank? And as you said, they're not necessarily going to talk about it publicly, because that just creates some reputational harm and systemic risk, either with customers or the like, or the bank, unless, of course, they are forced by a regulator, as they are in many countries, to divulge any vulnerabilities, penetration, as time goes by. to answer your question directly, I think enhanced monitoring is needed, and it might be a sort of a circular discussion, but you might need to outsource that to a fusion center, as they are in a lot of countries, where a fusion center within a banking group or a group of banks do the monitoring of any vulnerabilities, advanced persistent threats or the like. And I think they should drill down to even the least possible vulnerability, because that's what a hacker would look for. IoT devices aren't necessarily the APIs or their firmware or the like, aren't necessarily upgradable. So those create a vulnerability, and as we've seen, I mean, air conditioning vendors, for example, with air conditioning IoT type of devices have been shown to be easy intrusion points. So I think a full audit of vulnerabilities is needed, and outsource is necessary, and closer collaboration with fusion centers that do the advanced monitoring and warn banks of any ransomware attacks or anything like. In fact, the latest ransomware attack on the oil pipeline infrastructure in the US wasn't just a once-off, although in fact, as I've read, the ransomware attack was spread over, I think, 34 companies in one day. So the hackers, and wherever they are, pulled the trigger in one day.
I was amused to hear them regarding themselves as a charitable organization.
Yes,
extracting money from corporations to give to poor people, they claim.
Yes, they were nice to say they've done due diligence on your accounting. So although and
they know what you can afford.
That's right. And issued an apology ostensibly for causing social harm. So people fighting at gas stations in the US for lost trips of gas at gas stations or petrol stations, whatever you want to call it. But that benevolence, ostensible benevolence, is hardly credible, and certainly don't expect that from anyone. They're just out for your money.
Absolutely,
Can I ask a question for Leon? This is David Medine. Hi, Leon. I wonder if there's a risk of overreacting to solar, wind, and these other developments, and fear of outsourcing to the point where you don't outsource, and you've got the problem with smaller institutions that lack the sophistication of doing state-of-the-art cybersecurity. Before the pandemic, I had the privilege of visiting with a bank in South Africa that was almost entirely in the cloud. And that was the only way they could really afford to provide services for the townships and low-income consumers. If we told them that they had to build their own data storage and apply state-of-the-art cybersecurity, they probably couldn't have a business model that succeeded in helping poor people. So, and the cloud providers spend, I don't know, millions or billions on cybersecurity. So do we have to sort of take a fine look at what's going on here and be very cautious about outsourcing, but not so cautious that we end up actually doing it in-house and creating even greater risks?
No, you're absolutely right. That's not to say that SolarCrowd and SolarWinds is the absolute break on outsourcing. Of course, outsourcing in cloud is here to stay. You can't unscramble the egg. So you make best of what you have.
Yeah, you put in the appropriate countermeasures. Exactly. You can't just not do it. In fact, Jeremy, I was going to actually pose that question to you, precisely that question. Would you like to address this?
Sure. One of the things that we have found in past experience is this whole notion of a secure code promote process. And that goes for utilities and outsourced or vendor-related products. And then the second thing is, as Paul was and the other
David
members here have been saying, is the importance of having appropriate terms and conditions and understanding what those terms and conditions are when you in fact outsource, and that you're now working cooperatively with that outsourced vendor to resolve the issue.
Sure. I mean, is there anything a bank can actually do to prepare against a successful ransomware attack?
Well, one of the first things I would start with is a penetration test by a trusted security consultant so that you can assess where your risks are. And then unfortunately, it's one of those eating the elephant type of thing of taking appropriate steps from those that are very easy. And the point here is you want to become a hard target as opposed to a loose target, because the loose target will be attracting the most attention because it's easier to get into.
Well, exactly. All you can hope with is hope for is essentially to persuade somebody to attack someone else. Don't make yourself an easy target.
And one last thing to mention here is the importance of your secure network design, whereby you're isolating things like your branch staff who have access to the internet and could bring in malware so that it doesn't affect hard targets such as ATMs. And so you can do this by doing logical network isolation of the ATM network from, for example, your branch network, which is different again from your web traffic from customers, whether they be via cell phone or personal computers, etc.
Thanks, Jeremy. Lisa, I see you have your hand up. Is there something you wanted to say?
Yes, I'm just interested in, so often what happens with these attacks is it's this massive encryption, for example, with ransomware, this massive encryption that then means you can't access the data that the company needs to keep.
Yes.
What's the role of having a reasonably timed backup? I know people talk about continuous backup and it's not possible on a huge company, but what's the role of having rollbacked data sources so that if you are encrypted, you can at least say, okay, I've only lost a few hours of everything and I can keep going?
Who would like to address that? Any volunteers? Jeremy?
I'll try and attempt to answer some of this. It's not only the backups, but it's also the transaction data that happened in flight. Yeah. So these are transaction logs, and these tend to be married together as part of your continuity protection type plans. So it's important that you understand those, but also before you start up again, you want to make sure that the threat doesn't already exist in the backup, because several of these attacks, actually, the attack was initiated several months before it was actually executed. In other words, the Trojan horse was embedded in the code. And this gets back to the importance of that source control. In other words, you want to detect somebody's trying to make that malware attack into your system. And so it's, unfortunately, it's a multi-layered defense. It's tricky, it's hard to do, but if you're disciplined, you can be very successful in it.
Thanks. Diego, I'd like to bring you in, if I may, particularly around the issues of how we persuade banks and their staff to actually use some of the controls that we can put in place. I mean, often staff in particular resent the burdens of complex sign-ins and other security measures. How can these strong security and authentication tools that we know make a difference, how can they be made staff friendly, customer friendly?
Thank you for the question. That is a very interesting and very complex, actually, solution. But first of all, I think we need to balance, right? Obviously, we need to make sure we're compliance with the security and privacy laws or requirements, but at the same time, try to help the users use them and adopt them. So one of the things we could do is trying to think of not educating, but actually helping users adopt those. So typically what we always do, and actually it's a good practice, is that typically you send an email saying, make sure you update your software or make sure you update your password, etc. So that's kind of a push, you know, but that is not enough because some people, even if they see it, they don't act on it. So what we need to do is actually encourage that by using different design techniques. As an example, we know from different studies that your social circle can actually help you or motivate you or trigger for you to act. So in terms of education, is not really, it's about making sure that the corporation has an inclusive culture where actually topics of security are shared or best practices are shared within the social cycle around you. And so that's an example, for example, from Facebook. I remember, you know, this is an example where people in your social circle mention about their security settings that they have upgraded or they have changed. And so people share that, and because you trust the people you interact with, then they're prompting you to do that. So that's one of the things that we can facilitate. People adopt those things. But the other thing is about making things easier from a technology perspective or facilitate that. So an example of that is some of the banks say, make sure that the site is secure. And they also say, okay, how do I know that? Well, you have to look at the S and the HTTP, but where is that? How do I find that? So I think we are assuming some of these policies or some requirements, we are expecting people are technically savvy. And so instead of trying to come up with courses to teach them how to do that, why don't we develop technology or some kind of a design artifact that when you log on to a page automatically shows you, hey, this is not secure. I know browsers are now having that capability, but from a bank perspective, if I'm logging into my online banking, you know, make sure that once I successfully get authenticated, I get kind of a prompt say, hey, this is the bank, blah, 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 some kind of a unique identifier, letting me know that I am in a secure property. So
Diego,
there
you're
are different
absolutely
ways.
right. You're absolutely right. I think there are many aspects of the financial services sector, not just around cybersecurity, but also how we deliver services, where we could help customers to develop their understanding, not just of the cybersecurity, but also how they can access the service in a safe manner and what the services that are best for them in that context. Would you say?
Yes, definitely. So I think it is it's just trying not to it's trying to understand that, you know, especially the banks, you know, when we're designing for banks, it's a very challenging task from a design perspective, because you have to meet the needs of millennials and baby boomers. And within each group, you will see that some people have the motivation to be up to date in their, you know, in their security best practice, adopting security best practices. Others are not. Some people are technically knowledgeable; they can execute what they ask the bank is asking them to do. Others are not that confident, right? So I think one of the challenges is trying, again, another thing we could do is
whose responsibility is it?
Understand. Exactly. Understand the target audience and make sure we design things to make it easier for people to adopt these best security best practices.
Thank you, Diego. David, I'm going to throw you a tricky one, I'm afraid. What about systemic security? If we're all interconnected and we can only be as secure as the weakest link, does this mean that we should actually consider excluding weaker institutions from the digital economy?
I think what it means is we want to bring everyone into a cooperative effort of sharing threat information, sharing best practices, being advised of open source software that can be less expensively and more conveniently used. But I think we're all in it together. Right now, someone mentioned the cyber attack against the oil pipeline. Here in Washington, D.C., we have lines at gas stations now because people are concerned about the availability of gas. If you're a bank executive, just imagine if there was a successful cyber attack and you had lines outside your bank to withdraw money because of insecurity about the banking system. I think it's a real wake-up call.
That's happening with one of my customers right now.
Yeah, and anyone can be attacked,
Yes.
and we recognize that not every institution is sophisticated enough on its own, but pool together, both pool together within a country, but also, and one example of that is Luxembourg, where you have over 100 banks that are as competitive as could possibly be in everything except sharing cyber threat information, because they know it's in their common interest to do that. But take it a step further, which is among countries, and the Caribbean is a perfect example, where a group of countries to get together and create a cybersecurity resource center and have efficiencies of scale where they could do training, education, best practices, sharing threat information. And so I think it's a tremendous opportunity to take advantage of visiting the weak link and say, we're going to help you out and bring you into the system.
But how do you persuade a bank to admit that it's been subject to a successful attack? Because there's the reputational risk around that. We all know of, everyone on this panel knows of attacks against financial institutions that have been phenomenally successful to the tune of millions of dollars. And yet you never see it published in the press anywhere. So how do you get these institutions to admit that this has happened?
Well, I think again, in the US and EU and other places, there are laws that mandate breach notification to customers so customers can take steps to protect themselves. By the way, another thing, this is maybe somewhat
but often
controversial.
it's the inside job. They're not going to admit to it. Sorry, I'm thinking of my experience in Africa and Asia. So,
Yeah, no, I'm being realistic. It could also be a internal supervision or regulatory requirement to notify the bank supervisor and have considerable sanctions if they fail to do that. Another thing is to impose liability. This is maybe somewhat controversial, but to impose liability on the financial institution for the losses to their customers. And that is a tremendous incentive to do a better job. We've certainly seen the credit card industry has done a spectacular job at reducing fraud because they're the ones who get left holding the risk. And whether it's mobile money or banking, it's very sobering if the financial institution knows that they're on the hook and they're going to take extra efforts. And again, I'm not saying that they have to be 100%. There may be times when the customer is negligent in protecting their PIN. So maybe a allocation of risk, but if you have a little bit of sort of skin in the game, it gives you tremendous incentive to do a better job.
Absolutely, couldn't agree more. I see we're actually heading towards the end of our time now. I think we've got about 4 minutes left. I'd like to ask one general question, and anyone on the panel, please chip in. We know that there's a range of cybersecurity frameworks out there. We've all worked in the development of some of them. Which would you recommend for further consideration that would be of value to our audience? Would anyone like to comment? Perhaps, okay, I'll pick someone out. Leon, what do you think?
Sorry, I broke up there for me because I'm on a phone. Could you just repeat the question, please?
Okay, we know there's a range of cybersecurity frameworks out there. Which would you recommend for further consideration by an audience of bankers? Very leading question to Dr. Leon Coleman.
Can you hear me?
Yes, hear you perfectly.
Okay, that's sort of a trick question, as you know, for me.
Possibly some comments.
Well, you know that for the past 2 years or so at Columbia, the DFSO, which I head, we've been building a cybersecurity risk management framework. Which is really aimed at developing countries at a range of players. So it starts off from agents to tier 1, tier 2 banks. So it's published. So again, with with interested eyes, I encourage people to go to dfsobservatory.com. You go to dfsobservatory.com to look at the draft framework, which again is for developing countries and takes into account all sorts of challenges which would not necessarily fasten on other countries. So it takes into account unique challenges of an ecosystem, including, as we've discussed, partners who might not necessarily be technologically savvy when dealing with a particular bank. I mean, there's a range of cybersecurity risk management frameworks out there, but nothing that we've seen, because we built it with the developing world in mind, that takes into account the mobile money.
Can I just highlight one, the IFC cybersecurity risk framework, which I may possibly have had some involvement with.
Yeah, I think you had more involvement in it than I did.
Well, I wrote it.
Yeah, that's what I mean.
So I'm just trying to make the point that there are families of cybersecurity risk management frameworks, and they're all interrelated. And they, a lot of the people on this call have had involvement in their development, and each iteration we get better, and I expect that process to continue as we move to the next generation of risk frameworks.
One thing I'll say about the risk management frameworks is that they're kind of meta level, and the one we did at Columbia is very practically oriented. So it takes you in an iterative manner through what people should do. But the idea is to, and a lot of the frameworks, if you've seen them, just are unfortunately an Excel dump.
They are. That's the heritage of these things, going right back to the GSMAs.
Yeah, exactly. Yeah, exactly. I think you and I worked on a couple of those. Right?
Yeah, that's right.
So where do you start? It's like going to a maze. And once you've started, you're going to get lost in the details by the maze. Yeah. And really follow who's completed what, because as you know, in the risk management frameworks we worked on, it's kind of as it's an iterative process, one person has to complete a component and then hand off to the next person, but who's going to check that everything has been not just completed, but completed correctly in the right format, in the right sequence, and with the correct people. So what we're trying to do with the Columbia risk management framework is automate it through a blockchain-based RegTech system, so that you effectively it's RegTech, and that's what you need in a situation like that, and not a difficult RegTech that requires enormous amounts of training, but more again an iterative process that the software now helps you through, rather than you having to scramble to find your way out of the maze you've got yourself in once you get to all sorts of permutations of what the threat is and how you responded to it.
Yeah, David, what's your view of that?
Well, being parochial and a U.S. citizen, I guess the NIST framework is.
But all these are derived from NIST.
Exactly. So I'll invite that as the mother mentioned, and then I defer to you technologists for the details, but I think having a structure and something to check off against is critical to getting up to speed.
Yes. Lisa, I see you have your hand up. Is there something you wanted to add?
I just wanted to chime in. In the Caribbean, you now have a lot of indigenous banks taking on business and assets from large international institutions, in particular the big Canadian banks. What is the cyber risk that they take on as they're doing these integrations, as they're moving into products and channels that they may not have had or not had as much in order to serve these new customers that they're bringing on? I mean, I understand that Republic is a really large and really developed bank, and then there's these smaller banks which are trying to take on a kind of client-based and service that they've never had before. How do they deal with that, with the risks that come with that?
That sounds like a question perfectly pitched for Jeremy.
Well, it's also about KYC and
yeah.
how
Jeremy?
do you verify?
Not sure if I can answer this very well. All I can say is we're all on a treadmill, and this is a situation of continuous improvement. So by being aware of, what various bank processes and responses are like, I think you can develop more appropriate responses over time. But we're all on the treadmill. You only have so much money. You only have so much time and energy. So I'd like to, bouncing back to you.
Do we have any more time? I think we're supposed to finish by now, weren't we?
Gary?
We're just about set to wrap up, but I think we'll go on for perhaps about 5 more minutes. So
Okay, I've got one more round of questions I'd like to put to people. So I'm going to ask each of you. Let me start with you, Jeremy. If there was one thing you could ask today's attendees to do immediately, which would have a tangible effect on the security of their institution, what would it be?
Immediately contract for a pen test by a security consultant that you can trust.
And how do you trust a pen test person?
Well, no, it's the reputation of the firm that you're, and it's through your contract with the firm. These people, unless you know them individually, they're typically involved by a consulting firm.
Sure. Diego, what would you say?
Well, I would say is trying to understand the impact of these security requirements on people, and how do we make them more accessible, inclusive, and easy to adopt. And that requires really focusing on what are the challenges the customer face in the customer journey from login to transaction and post-transaction, because security has to be 365 days of the year. It doesn't start or end at the login page. So I think it's having a broader overview of what security and its impact and expectations from customers.
Thank you. Leon, what would you say? What's the one thing people should do?
Security audit, internal and external. So if it requires formation of a specific cybersecurity committee, if there isn't one already, that reports to the board, that should be effectuated as quickly as possible, as well as the audit, a questionnaire, if you will, to outside contractors, asking about any cybersecurity issues they've had or penetration.
And finally, David.
Update.
That's a good one.
Equifax could have saved a couple $100 million if they had just updated their software. And we have threats that go around and they get updated. And if we don't take advantage of them, we're opening the door to the bad guys. So update.
That's great. Unfortunately, I can't ask Dr. Louis De Coker. I'm sure he's asleep by now. So
could I just add to the update thought? Certain devices we are contained in terms of their data sources and so on. So I'm talking about things like ATMs and servers and things like that. There is software technology available that incorporates whitelisting as opposed to those notorious antivirus files that you have to put on. So if you can look at some of the technologies, there are some solutions for some of the areas of your infrastructure that can avoid the necessity of the updates to perhaps a quarterly or an annual basis.
Thank you. In fact, I would also argue in relation to the update question, never allow your financial application to be uploaded onto a jailbroken smartphone at all, ever. Jailbroken is just another term for security has been removed. On that note, I'd like to hand back to Lisa, or is it to Terry? So thank you. And any questions that people might have.
Thank you so much. That was really interesting, and to hear all the different perspectives that we had on the panel. I don't see anything in the Q&A, which I think means, gentlemen, that you managed to cover a lot of the concerns that were in the room. Thank you very much for your time and for coming from all over the world in order to do this event. And thanks very much to the Caribbean Association of Banks for giving us this chance. Terry?
Thank you so much, Digital Financial team. You guys have been amazing, as always. This is the second interaction that we've had in terms of our public outreach, and we look forward to doing a lot more with you. In fact, we will be having you on as well next week. So we will be looking forward to talking a lot more about correspondent banking, and in fact building a correspondent banking playbook, which is something that we had discussed at our last webinar, I think just about a month ago, Lisa.
Yes.
So thank you very much to all of our facilitators today. I think we've taken away a lot of learnings. I've already started getting some email messages in as to some of the presentations that we've had throughout the course of the day. And we look forward to sharing some of what we've learned today with our broader membership. Thank you very much, everyone, and do enjoy the rest of your day, or in a couple of cases, the rest of your morning.
Thank you.
Thank you. Thank you, Terry.
Thanks much. Bye-bye.
Goodbye.